Hey, what's up, everybody? Welcome back to another live stream here on the TylerHillStocks channel. Happy to see you all today. Bit of a up and down sort of day, right? Bit of an up and down sort of day. Got some winners, got some losers, got some interesting earnings going on. My portfolio was sending it earlier this morning. It was up about $3,200 at the peak, which actually put us at an all-time high today before pulling back to basically break even. I know a lot of us are around break even today, so not too dang on bad, huh? We got some things winning, some things losing. We got Nvidia up 4.39% with a breakout today. Nvidia is breaking out, which we'll talk about in a little bit here. We have Micron breaking out, or trying to break out, at least. You can see Nvidia is breaking out. Micron is trying to break out as we speak. AMD is continuing the pullback that we saw yesterday, a bit of a bearish engulfing candle that we're going to talk about later today. We have some earnings coming up. We have Sandisk earnings coming in about 30 minutes or so. So we're going to be getting prepared for that. We had some earnings earlier today, which we are going to go over from some stocks like Disney, Eli Lilly, McDonald's, and Uber. Some interesting ones. And then we have more earnings outside of just Sandisk. We have Western Digital. Shout out to the homie Disco Cat. We have DoorDash. We have AppLovin as well. We have a couple important ones, but the big boy today, obviously, is Sandisk, another semiconductor company that will be doing their earnings report. And the market's not maybe, it's feeling a little bit nervous going into this one, especially knowing that, we saw a bit of a slowdown for AMD. It wasn't the sort of acceleration that the market was looking for. So very interesting moment here for Sandisk, especially as it is approaching this trend line, right? You have the trend line approaching right there. And yeah, it's going to be an interesting moment. If we just kind of go ahead and get rid of everything, you can see exactly what it is that I mean. We have Sandisk approaching a key trend right now as it's approaching its earnings report, which definitely does put the price in jeopardy in some capacity. An earnings report that the market likes gets Sandisk out from under this thing and finally gives it maybe an open shot back up towards 1,700. An earnings report that the market doesn't like probably puts Sandisk somewhere back around $1,200 to $1,120, somewhere in here, right here. So it's going to be an important moment for the AI trade today. It is going to be an important moment for the market as well, especially as SPY is trying to make that beautiful move. SPY making the exact move that I called for. I told you all that if SPY was capable of coming up and breaking above this golden zone, that I thought it would have the ability to start working itself back up, not only to an all-time high, but into the extension zone. I told you all, look, you're looking for the $751 level. If SPY breaks that $751 level, the first level it's going to try to take out is $760. If SPY can take out $760, you're looking at a run up towards $771 to $785. That was your extension zone. This is the level, a little bit different actually, $771 to $785. Yep. And that's exactly what happened. Broke through the golden zone, came up, reattacked $761, cleared it, came up into the extension zone, and now it is pulling back a little bit here. We did get some divergences and stuff forming, showing a bit of selling pressure happening in the extension zone, but SPY made the exact move that I was calling for or looking for. Not that I said it was going to happen. I never said that SPY was going to do that. I said if it broke the golden zone, this is what could happen. I'm not going to sit here and pretend like I told you this was going to happen. But yeah, I do know a lot of people who opened up some call options on SPY once we did get that move past the golden zone, once it broke out right here and it started clearing through that previous high. Shout out to you guys. You're actually looking on a pretty decent gain. Just in the last few days, you're probably looking at a decent 2.6 to 2.7% move. So that's great. I know a few of you also opened up leverage trades. Open price right around 756. Take profit right around bottom side of the extension zone at 771. 5 to 10x leverage on a couple of them that I saw. So a nice little 10 to 15% gain there. So congratulations to anybody who was able to capitalize on this move. And this is why you don't sleep on the golden zone. The golden zone will tell you where the price can go, folks. When you break that golden zone, it's like the floodgates open and the buyers take real control of the price. You cannot ignore the golden zone. And there you go. And there you go. Seeing some golden zone interactions also happening outside the chart. So got a good bit to go over. Nvidia itself is also at a golden zone. And listen, if Nvidia can break above 225, it's coming to try to take out 236 and maybe push as high as 250. I'm sorry. I know some people don't want to hear it, but that is what can happen here. But we're going to get into all of that today. Don't you worry. But we are currently 22 minutes out from Sandisk's earnings, and you need to be ready for it. You need to be ready for it. So this is the game plan today. Okay, we have another important day of earnings. We had some this morning. We have some coming up tonight, okay, over the next few hours. So the game plan is to go over quickly what happened this morning. Then we're going to dive into the ones that are coming out in the next 30 to 45 minutes. Then after we get those earnings reports, we're going to do a bit of market analysis. We're going to go through Nvidia. We're going to go through Micron. We're going to go through AMD, SoFi, Robinhood, Meta, Microsoft, Amazon, Google. I'm not going to let you leave this live stream unprepared, baby. Okay, now listen, I got some bad news. I got some bad news today. Got some bad news, folks. Your boy's got to go out of town tomorrow. Your boy's going out of town tomorrow. So there's not going to be a live stream tomorrow or Friday or Saturday. Maybe Sunday, but probably not. So I'm going to be gone for 4 days. Okay. So I need you guys to be dialed. Okay. We got to get dialed. We got a lot of prep work to do. We got a lot of stuff to cover. So lock in. All right. And before we get into it, remember, there's 320 of you fellas in here. Hit that little like button real quick. Scroll down, hit the little like button. All right. Thank you. So let's lock in. Let's crack a little cold one, huh? And by cracking a cold one on my side of town, I don't mean a beer. I'm talking about a good old pink slush Alani. Shout out to Celsius Holdings. Give it a little. Oh, yeah. Let's dial in, huh? All right. Get you a little refreshment. Get you a little snack. I'm going in with some salt and vinegar Lay's because this is all we had left. But because I'm a grown man and 160 calories of chips ain't going to do it, we got 2 bags of chips for this earnings day, all right? We're feeling dialed, baby. All right. Get that posture up a bit. Let's get into it. So what happened this morning? Earlier this morning, we had earnings reports from a few different companies. Disney, Eli Lilly, McDonald's, Uber. If you don't know who Disney is, go look outside. They probably own something you see. Eli Lilly is the company who is basically creating those same weight loss diabetic products, similar to Ozempic, different company. McDonald's, go on the highway, look for the yellow thing. That's McDonald's. Uber, you need to get somewhere and don't have a car. You call someone, that's Uber. You already know who this is, okay? So these are major companies, especially in the world of consumerism. And it's always important. Listen, I know they're not AI companies. I get that. But the reason it's so important to pay attention to how's Disney doing, how's Eli Lilly, how's McDonald's, how's Uber is because in many different ways, they tell you how the consumer feels. How do average people like me and you feel? Are they spending money? Are they saving money? Are they blowing money like crazy? Because remember, in the world of stocks move up because they make more money. But the only way for a company to make more money is for people to spend it. Those people are consumers. And so in an environment like we're in right now, where inflation's all crazy and people are all nervous, we got to see, are people spending money or not? And what does future projection look like? Because it'll help us get an understanding of future price impact and future potential revenue, okay? So with that in mind, Disney's EPS was expected to be at $1.88. They absolutely smashed it, coming in at $2.06 of EPS. Problematically, their revenue was expected to be $25.4 billion, came in a little bit shy of that, $25.2 billion. But because their margins were great, their EPS absolutely smashed it. People are giving them a bit of a pass. Now, if we go look, I made this presentation like 45 minutes ago, so we'll see what it's looking at now. Yeah, still looking decent on the day. That's looking good. They did get that new TikTok deal. That was interesting. They did raise back their buyback as well. So I would honestly say this is a pretty good read for any of you Disney folks out there. Not for me. I am a Universal Studios fella. I do enjoy a little theme park, a little ride there. Little Animal Kingdom guy myself. But good for Disney. Eli Lilly, they missed on earning EPS, and they missed on EPS pretty bad. Estimates were at $8.84, came in at $8.38, but they did raise their fiscal year guide, which is interesting. It seems as if it's kind of like hey, we had a rough last quarter, but trust us, it'll get better next quarter. So it seems like the market's giving them a bit of a second chance. We did say their price hold up today. Isn't it funny that a company outside of AI can miss on EPS, and because they say it's going to be okay, it pumps, but God forbid AMD release better than expected earnings, right? God forbid. But anywho, so what we got from Eli Lilly. McDonald's came in. They beat on profit. EPS came in at $3.38. Estimates were at $3.32. But U.S. traffic was soft. U.S. comps were at plus 0.8. Estimates were at 1.1%. And what that means is that maybe people are spending a little bit less. Maybe a little bit less on food. Now, I don't know. Maybe it's just a bit of seasonality, a little bit of cyclicality. I don't know anybody. Listen, folks. I got homies who got $0 in their bank account, and they still managed to get a Big Mac on a Thursday, right? I got friends who got more money than I've ever seen in my life. They still get a Big Mac on a Friday, right? So people are still getting McDonald's, but interesting for sure to see that U.S. traffic was just a bit soft. Something to pay attention to. Uber came in, beat EPS by 1 cent. Met revenue, so basically flat. The only thing that the market didn't like was the fact that their guidance was a bit soft. Tells you a little bit of something, right? Tells you a little bit of something. Maybe people are Uber eating a little bit less. Maybe people are ordering Ubers a bit less. Maybe they're traveling a little bit less. Maybe, people are spending a little bit less. And it does go to show that the economy that we're in right now isn't amazing. So many metrics and so many numbers will try to convince you that the economy's perfectly fine. You guys seen that? Y'all seen all these reports where it's like the economy's better than it's ever been before, and we're all sitting around like, I don't know about that, right? Y'all seen this? Yeah, that's what I'm saying. And I think a lot of these companies reporting and showing that things are coming in a little bit soft. It says that. Now, overall, look, these are great reports for the most part. Got some misses in there. In general, not a terrible day. A decently strong morning, okay? Got a couple soft spots. But with that in mind, it's worth paying attention to. You always want to pay attention to how the economy's feeling. And remember, on Friday, we get jobs reports. Going to also give us a bit of feedback. Because think about it like this. This is something that can apply to you. Maybe you think, Tyler, I don't care about the economy. Let me walk this back a bit. Let's say the economy is in an amazing spot. Everything is good. The jobs market is great. People are spending money. Cha-ching, right? But we have an inflation issue. Inflation's a bit elevated, a little bit higher than the Fed wants it to be. That could open up the door for the Fed to start raising interest rates because they're like, we can, right? Economy's doing fine. They can calm down a little bit. Let's raise these rates. We got the room to do it. And that's not great for stocks, right? Right. But if the economy's like, if it's a little, it makes the Fed second guess it. And I personally think that that's in general a good thing for the stock market. And you can kind of see with the way the market's performing right now. So it does apply to you, whether or not you feel like, how the economy is feeling and how consumers are feeling. Not, it does apply to you. So a strong morning, decent reports, but some things to pay attention to. Okay, some things to pay attention to. Now, with that in mind, let's get into what's coming next. Let's talk about what's coming over the next 15 minutes or so, because things are going to heat up here pretty quickly, okay? And sorry, I'm going to update these timestamps. Getting the timestamps in there for you all. So, next up, Sandisk, DoorDash, Western Digital, AppLovin, okay? I don't personally care about AppLovin that much. It is kind of in the software side of things. They do make a lot of money. Big revenue company, worth paying attention to. I don't really care. But, of course, remember, software is very important. I'll get into that in a second. Now, the big ones, though, are Sandisk and Western Digital. Sandisk obviously being the big one here, Western Digital, and then DoorDash, very similar to Uber, very similar to McDonald's, just a consumer read, okay? When it comes to Sandisk, that's the big one. So I'll go into that one more specifically in a second here, okay? But let's kind of jump into the other one. So you have Western Digital. Revenue estimates are at 3.7 billion with EPS expected to be $3.35. Remember, you're going to want to see these numbers higher than that. You're probably looking for at least 3.9 to 4 billion. EPS maybe 342 or higher. 340, 342, somewhere up there. That is what's going to make the market happy. Anything short of that, market won't like it. AppLovin, very similar thing. You're probably looking for revenue to be at least 2.01, something along those lines. You're looking for EPS to be, close to 380, ideally. That'll make the market happy. Without that, market won't be happy, okay? Look at what happened to AMD yesterday. It just beat. It wasn't a great beat. It was a little beat. Wasn't good enough. DoorDash can kind of do whatever it wants. No one really cares, okay? Let's talk about Sandisk. Because this is the one that I care about the most today. This is the one that I think is the most impactful today. And this is the one that I'm actually intrigued about because Sandisk is now back at its trend line. It's back at the top side of its structure. And I do believe that what happens today will determine what happens here. Does Sandisk get rejected or does Sandisk start to break out? That's going to be very important for a lot of you who hold Sandisk or any of the related companies. This could have a bit of a sideline impact on Micron. Probably not anything crazy, but a little bit worth paying attention to, okay? So, when it comes to Sandisk, what they do is they make NAND flash memory. These are the storage chip inside of the SSDs, data center servers, phones, and laptops. It spun off from Western Digital in 2025 to become a pure play flash memory company. Okay. And the reason why this matters for AI is that every AI model has to store enormous amounts of data. And think about it. When agentics and robotics continue to take form, it's just going to take more memory and more data. And AI data centers are buying these enterprise SSDs at a staggering pace. When memory supply is tight and demand is exploding, prices rise and SanDisk margins go with them. That's the setup right now. So companies like SanDisk with their NAND flash memory is very, very, very important. And considering what we're seeing in the world of semiconductors, you got SK Hynix missing, you got AMD coming in a bit lighter than people would have hoped it to be. Makes you go, all right, SanDisk, you're up, buddy. You're up, bud. It's your turn to go. Let's see how this goes. And I think a lot of the people who've maybe held on to a bit of hope when it comes to semiconductors are going to be watching this earnings report tonight. So it's going to be very important. And the cool part is we don't have to wait long. It's 11 minutes from now. All right. Now, when it comes to the actual numbers, EPS $35, revenue $8.3 billion, gross margin 80%. Whew. That's what we're looking for. Okay. Now, management guided revenue of 7.75 to 8.25 billion and EPS of 30 to 33. But Wall Street is already sitting above that at 35 EPS. So understand something here. The market isn't just looking for a beat over guidance. It wants a beat over the raised bar. So while SanDisk said, yeah, we'll probably do about 7.75 to 8.25, Wall Street's looking for 8.3. And the reality is, listen, 8.3 ain't even good enough. When it comes to SanDisk, you're probably looking for at least 8.6. 8.7 for the market to be happy. EPS 37, 38, 39, maybe somewhere in there. Gross margin, I think anything over 80% is fine, right? Under that would be a little bit concerning, but 80 or higher, it's fine. And depending on what happens here, there's a 16% price move in, or a 16% price move priced in, meaning that Wall Street is expecting, based on options trading right now, a move of upwards of 16% in either direction. That could send SanDisk up to 1,600. That could send SanDisk all the way back down from where we are right now to around 1,100. So we got a bit of a $500 spread here based on what happens. Let's keep this marked in just for today. This is what we're potentially looking at here, depending on how this goes. And I do think this will have some sort of side effects on the rest of the AI trade. Very important, because the AI trade already feels a little bit skittish today. A little bit skittish. Look what's going on. You got AMD down, Qualcomm, Marvell, AMD, Microsoft, right? So this is going to be very, very, very important. Yeah. And I was going to dive into this, but I've already kind of talked about a lot of this, okay? Now, in addition to all of their earnings, we already kind of talked about a lot of this. When it comes to their earnings, in addition to these numbers, remember, we also have to look at guidance. So when it comes to guidance, they're about to release their fiscal year 2027 outlook. Remember, there's a difference between a calendar year and a fiscal year. They're about to report their 2026 Q4 fiscal year results. Now they're going to give us insight into fiscal year 2027. What do the next 12 months look like? And considering that a lot of stocks trade on forward 12 months, the next 12 months, obviously very important. It's obviously very important. So we're going to need to see what they say when it comes to guidance, because they're about to give us guidance for a much bigger time horizon. That'll give us some insight into the memory trade, okay? So that's going to be very important. That's going to be very important. Now, in addition to SanDisk, as I mentioned before, you have Western Digital. So Western Digital is the old parent of SanDisk, essentially, okay? Now, SanDisk broke off and focused on NAND flash. Western Digital kept the hard drive side of things, the high capacity storage that fills the actual cloud data centers themselves, okay? So they're kind of like one and the same, but they do two completely different things, but they're kind of tied together. So I would assume that if one does decent, the other should do decent, although they are in different markets. But it's going to be very important to pay attention to it. So when it comes to Western Digital, we're going to be looking for 3.35 EPS on $3.7 billion of revenue at minimum, but that's not good enough. You're probably looking for, like I said, 3.40, 3.9, or 3.39, 3.4, something like that. 3.9 billion revenue, 4 billion revenue, somewhere around those lines. All right. So the big boys that we're going to be paying attention to today, these two, SanDisk, Western Digital, mostly SanDisk, a little bit of Western Digital as well. But I do think SanDisk is the clearest read on demand in the AI trade right now. Okay. It's what matters right now. So their earnings are going to release in about 7 minutes. So just to give you a bit of a recap on what's going on today. This morning, we got some consumer-based earnings reports. They were pretty decent. They were decent. A couple soft spots here and there. Showed that consumer sentiment maybe isn't in the best spot, not in the worst spot. It's just doing all right, right? Pretty strong morning. Going forward, we're about to get more of the AI side of things. Sandisk, AppLovin, Western Digital. 2 semiconductor plays-ish, hardware plays, 1 software play. All of this is important for the AI trade, especially in a moment where the market feels a bit finicky, a little skittish, all right? So when this releases, what I'll do is we're going to compare them. We're going to go in and kind of see what we get. Revenue, EPS, et cetera, and we'll see how the market responds. Now, a lot of people are contemplating buying Sandisk right now. And I want to just give you my warning. I would always recommend waiting in a moment like this. Now, look, remember, I'm no financial advisor. Do I look like a financial advisor to you? This probably isn't what you'd expect to see if you walked into a financial room, right? This is a random dude in a random purple room somewhere. And you want to know the secret? You want to know the truth? This room ain't even purple. It's a purple light. I'm a liar, okay? So don't take advice from me. But with that in mind, when you're directly under a trend line, when you're directly under structure like this, there's a lot of danger. There's a lot of danger right here because there's sell pressure sitting directly on top of you, and it's forcing that price down. It's just constantly pushing it lower and lower. Those sellers are stepping in because they know what happens if Sandisk gets up here. They know what happens if Sandisk starts to break out. So they're going to fight like hell to not let that happen. It's a lot of resistance there. There's a lot of danger here. Right. So you're going to want to be very, very, very careful if you are buying Sandisk going into this earnings because it does have a downside bias already. So it's going to take something really good to get it above this trend, above this structure. Okay. So let's look at the toolkit. Right now, what we can see is that as Sandisk is pushing up, it is currently interacting with a liquidity zone, and you have a plus 2.7 on the 4-hour, and your daily is still neutral. So the good thing is here, on the shorter time frame, although you are on trajectory downward, there is a bit of a bias to the downside because the fact that your daily is back neutral, slightly green / neutral, you actually do have a decent chance of, even if Sandisk does pull back here, it can reapproach the trend. So if you do see a rejection here, maybe don't freak out. It's not the end of the world, but it is worth paying attention to. Okay. It's definitely worth paying attention to, and you're going to want to be a little bit careful here. So I'll keep you guys updated, of course. Hey, I do want to let you guys know. I really want to let you guys know. Sandisk earnings are in 4 minutes. I need to update you on something really quickly. 2 things. First and foremost, I am currently, when it comes to the toolkit, I am working on a brand new feature, which is a divergence detector. So what this does is it automatically detects bearish divergence. Let me get rid of all this real quick. Bearish divergence and bullish divergence, which is like another confirmation that some sort of reversal could be coming. So look, the divergence flashed right here before it dumped. The divergence flashed right here before it pumped, flashed before the dump. It didn't really flash here before it pumped. It didn't work out here. So it's not perfect, but it does work very well. And you look at history to see how it's gone. This divergence detector is going to be releasing a little bit like in a few weeks. And then there's another feature I am working on right now, which is a golden zone detector, which will automatically apply golden zones to the chart for you. When these 2 things release, the price is going to go up for the toolkit. It's more features, more work, price goes up. Could be 30, 40% price increase, okay? Right now, there's a 10% discount code, toolkit, 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 linked in the description. If you get the toolkit now, you will get this update when it releases. And you can get it at a discount. I'm closing the discount code tonight. Right before I go to bed, I'm going to press a button. It's going to turn off. And then the price is going to go up in 2 weeks. So if you've been thinking about the toolkit, I'm not pressuring you. I'm just letting you know the price is about to go up when these new features release. And there's a discount right now. Maybe time to pull the trigger if you've been thinking about it. Okay? Just wanted to warn you. But with that in mind, we got 2 minutes, baby. We got 2 minutes. Let's get into it. Let's get it. Let's get it. Let's get it. Let's get it. I'm a cop. Can I use on the phone? Yeah, of course. It works on phone. It works on desktop, all that. Please help with the time tick understanding of the toolkit. I don't know what you mean. All right, folks. We are getting close here. Go ahead and get that posture up real quick. Sandisk earnings. Okay. I'm sorry, I'm just doing a little bit of All right, folks. You know what I'll do is I'll do a split screen. So I'll have Twitter here, Sandisk chart right here. Let's make sure we get that trend line drawn on real quick so we know where the trend itself is. All right. Pulling back into earnings. Get a little drink. Let's see. Should be coming pretty soon here. Sometimes they do it 5 minutes after market close. Sometimes they do it right after close. Sometimes it's 15 minutes. So we'll get an update pretty soon here. Conference call is at 4:30 p.m. So yeah, it's okay. Oh, nice. Okay, so their earnings call is actually earlier today. Usually we have to wait a full hour. So they should release them pretty soon then. We didn't miss anything important, right? No. Unless you care about Motorola. Got a nice bounce coming here right now. Let's get that toolkit on, huh? And let's get these zones off for now. As soon as the market closes, Micron drops. Did it? Nothing yet. That is a lot of price action, bro. There is a lot of movement going on right now. Bear, nope, not a bearish engulfing. Never mind. Breaking through divergences, never really a great sign. Oh, by the way, I did open up a long trade on SpaceX and it is down. I'll update you guys later on that. That thing's getting smoked right now. Oh, okay. Why are we dumping? Man, watching this, I know. I feel like we've been watching earnings all week. I'm over it. Yeah, my reasoning for opening a long trade on SpaceX is because everyone thinks it's going to crash tomorrow. So I was like, if everyone thinks it's going to crash, I'm going to go long. Probably a stupid move, but we'll see. All right, got some earnings here. Western Digital comes in, Q4 earnings beat. 356 EPS beat on the 330. That is a big beat. Good, 7.8%. That should be good. Year over year, 114%. Revenue beat as well. Sales 3.75. versus estimates of 3.69. That's a tiny beat. That's okay, but it does mean that their margins improved, which is great. Year over year, 43% increase there for Western Digital. That's great. That's a pretty solid beat for them. I don't know if the market's going to love it. Yeah, probably not. But that's a good that's a good beat. That's a good beat. Not what the market wanted, obviously, but I think Western Digital is just going through the same thing as AMD. It's maybe not good enough, but that's an 8% beat on EPS is solid. 1% on revenue the market's not gonna like that in general. They're looking for 5-10% beats minimum. I think there is a story here though that they are running the business well. Beating on 1.6% here, but beating EPS by 7.8%. But I don't think the market's rational enough to think that way. Could be a good dip buying opportunity here for Western Digital. Let's see. All right, there we go. Sorry, I'm updating the timestamps real quick. Sandisk out yet? Not yet. Let's go 30-minute mark. 30. Updating those timestamps for you, folks. All right. I would say this is a decent dip buying opportunity. Not that it can keep dipping from here. Don't get me wrong, right? I'm not saying that the bottom is in, but the fact that it's being beaten up over these earnings, yeah. If I'm a long-term investor in WDC, I'm going against the grain here. Yeah. All right, here we go. All right, folks, let's see what we got. Let me get my numbers up real quick. Oh, wow. Oh, that's a good beat. Oh, that's a good beat for Sandisk. How are we looking? How are we looking on price? Pulling back off of it. The market just doesn't give a shit, to be honest. It doesn't care if it's a good earnings report. That is good. Those are great numbers. 14% beat on EPS, 7% beat on revenue. Wow. This came in higher than I was looking for. I was looking for what? What did I tell you guys? 8.8, 8.9. We got 8.96, nearly pushing $9 billion in revenue. Over 39 EPS. 14% beat on EPS. That is a very, very good earnings report for Sandisk. It's going to get a bit of a pullback, right? You got that trend. I told you guys, you got to be careful. You got to be careful sitting under these trends. There's a lot of sell pressure right here. You remember, that's what we're talking about, right? Like, there's the downward bias. There's a bias on Sandisk price to pull back because it did price in a good earnings report, which is what got it up to that trend line. I don't think Sandisk is going to continue this downtrend much longer. I don't think Sandisk is continuing like this. I'm not really expecting that. You look at these numbers and the way the market has been turning recently, you might get a short-term correction here. I think Sandisk is actually entering into a decent buy. Might come down a bit lower. Probably going to come retest golden zone somewhere down here, right? Like, I could see it easily fall in 1133 to 1059. But these are good earnings. Now, obviously, I have to dig into it a little bit more. I need to go see some of their other things. I need to see some of the individual revenue. But all in all, when we're looking at Sandisk earnings, these are good. This is a good beat. Revenue of $8.97 billion, a 50% increase quarter over quarter, 372% year over year. Non-GAAP diluted EPS of nearly 39.25 EPS. Their gross margins of 84. Was I at 80%? Dude, I was looking for 80% gross margins. They came in 84%. Operating income of $7.04 billion, which is a 71% increase quarter over quarter. Full fiscal year 2026, revenue up $20.25 billion, 170% increase. GAAP diluted EPS, non-GAAP diluted EPS is $70.88. Data center ended up pushing up to 2.98, which is up 103%, with the edge coming in up 48% as well. Capital return, board approved an additional $14 billion buyback authorization, bringing total remainder authorization of $15.5 billion. Bought back $4.52 billion in the last quarter alone. This is a great report from Sandisk. People selling this thing, they're being extremely irrational. I think this is a dip buying opportunity. I think if this keeps dipping, especially considering the fact that Sandisk is already, it's still down 45% to 58%, depending on where you are. I think this is a huge read. I think when Sandisk turns around, when the market turns around and feels more confident, Sandisk is coming for this trend. Sandisk is going to break that trend at some point. I'm very bullish on Sandisk right now. I am very bullish on Sandisk. Anytime I see the market treat a price like this after earnings like this, especially when they're buying back, this is bullish. This is bullish. What happened with App 11? I'm going to come back to this. Ooh. Diluted EPS of $3.76, beating 367. So EPS beat, but revenue missed. That's not good for an AI company. I could only imagine this thing's getting rinsed. Yeah. Understandably. This one is more understandable. Fuck, 30% though? 30% though? Disco Cat, what up, G? A 30% because they missed on revenue? I guess we're comparing. Yeah, damn, man. Sucks to see. That thing's getting smashed at 302, closed at 417, down $100. Wow. The problem is it's going to be getting compared to Palantir, right? It shouldn't because they do different things, but it's a software play. And people are going to look at this and say, well, look at what Palantir reported, right? Look at what Palantir reported. They're smashing it. Revenue, not even close. EPS, not even close. Gross margins increasing. App 11, on the other hand, missing revenue. The only thing that saved EPS is their margins. At least they got a good bit of free cash flow, but still not good. Not great. Not great. I think this is one of the more justifiable pullbacks, but damn, I mean, we're talking all-time high to now down 56%. Yikes. Sandisk trying to get a bit of a recovery here. Hey, when does that earnings call start? Can someone let me know if it starts at 4:30 or 5:30 Eastern? Sandisk doing a decent recovery. I wouldn't be convinced that Sandisk is back. I wouldn't maybe bet on Sandisk not continuing its way down because what I've noticed is that Sandisk does have a history of capitulating, recovering before the close, and then trending down a little bit afterwards. So remember, if you're a Sandisk holder, you're not going to want to get too excited right now until Sandisk breaks this trend. Sandisk is not back until it breaks through this trend, which is currently like $1,450, $1,500. But this is a dip buying opportunity. If this continues, I'm telling you, I am going to open long trades on Sandisk because this Wolf Financial is on it, bro. Wow. This is a great IonQ coming in. Missed on EPS. Margins must be getting tight, but beat on revenue by a lot. This is a great earnings report, man. This is a great earnings report from Sandisk, dude. This is big from Sandisk. Let's see, WDC. Yeah. What did we say with WDC? I don't even remember. Nope, not that. It's good. It's good. Like, let me get some of the exact details real quick. What the hell? What the hell was this? Oh. Here we go. I mean, the issue with WDC, the reason why it's pulling back so hard right now is because it just barely beat revenue. And it's like, it's Q1 guidance, which is technically next quarter. It just wasn't a huge increase. The market is pricing in something really good. It's pricing in real perfection. And I'm not going to lie, like a $600 million raise for Q1 is just not very exciting for the market. Clearly, I mean, that's a lot. Like we're talking I don't know what percentage that is. I'm struggling to do the math. I think it's like 12%. But it's obviously just not good enough. And that's why you have such a pullback, right? 14, 15%. The good thing is for Western Digital, though, is that it is coming back down into that liquidity zone. You see all this liquidity here? It's coming back into that liquidity zone. That is technically its buy zone, right? This is like where your purchases start to make sense for WDC. So the problem is, this might have killed off a lot of its momentum. It's just kind of like back to the bottom side of this range. Yeah. Back to the bottom side of this range. I wouldn't maybe be scared. I wouldn't be scared of dollar cost averaging in here. I would be careful. The more time it keeps coming back down into this golden zone, the more likely it is it's going to break through it at some point, chase 300s. I do think it's getting beat down a little much, but I mean, they only beat revenue by what? Is that 10 million? I think that's 10 million. I might be a little bit ridiculous here. Yeah. They only beat revenue by 10 million. EPS was great, right? Margins are good. I just don't think this is exciting enough. I don't think this is exciting enough for the market that we're in right now, especially when it's finicky already. Sandisk, on the other hand. This is a big read, dude. This is a big read or a big report. How's it looking? Look at that divergence, man. Look at that divergence read coming in from the toolkit right at the top. Very nice. Crazy price action here. Did we hit 16% in either direction? No. Sandisk earnings call in 15 minutes. Nah, Treach wasn't able to make it to the stream today. I saw him in the chat earlier. Wow. I'm feeling real bullish, dude. Hey, let me start a poll real quick. Let me see how y'all are feeling. How do you start a poll again? Start a poll. Okay. Thoughts on Sandisk, bullish, bearish. Hey, go engage with that poll. Let me know if y'all are feeling bullish or bearish. Yo, I'm glad to see people buying that dip because the fact that it dumped like that is ridiculous. And hey, guys, hey, listen. Really quickly, if you are enjoying the stream, if you are feeling great, like not great about the price going down, but if you are feeling like I've kind of helped you guys get a grasp on all of these earnings, these numbers, all that stuff, please just scroll down real quick, hit the like button. Look, there's 870 people in here right now. This is the second biggest stream we've ever done here before on the channel. We're constantly breaking records because the people who watch now, you guys are liking it and it's sending it out. So those of you who are new here, you're here because people have been liking the stream. So if you could just pass it along, pass it forward, just like the stream. Okay, let's like the stream. All right, let's see. Bullish, good, dude. 169 votes, 89% coming in bullish, 12% bearish. Because it's a good earnings report. It's just this market we're in right now, bro. It's this market that we're in, but people are seeing through the BS. I think what's happening is that people are seeing through the BS right now, and that's why they're buying that dip. Why would you not buy that dip on Sandisk? You remember when Sandisk was at like $1,200 just now, I told you guys like this is a dip buying opportunity. I don't have Sandisk in my portfolio because I don't want any more semiconductor exposure personally. But if you're a Sandisk holder, like why would you not be buying in this dip? Even if it keeps going, like even if it comes into this golden zone. Look, I'm not a financial advisor, but it's one of those situations where like you have a company reporting earnings like this. EPS beat $39.25 EPS on expected $34.37. We're talking a beat of over nearly $5. A $5 EPS beat on a company whose EPS isn't even $40 is insane. Especially while everybody's saying like AMD semis, they're dying. Semiconductors are dying. It's decelerating. Does that look like deceleration to you? It doesn't look like deceleration to me. A company doing $8.9 billion of Q4 revenue. I don't think so. Their margins are only getting better. 84% gross margins. 84%. I only wanted 80. I'm sitting here saying, look, Look, 80% is fine with me. If we see them coming in 80%, I'll take it. It goes to show that they're doing a real good job at capitalizing on this this demand for memory right now. 84%. 84% driving their EPS to $39.25. Now, will this continue? I don't know. Data center revenue pushing into $3 billion. Market's off by $400 million. Do you guys understand how much money that is? $400 million. And remember, dude, I completely forgot about this shit. Hold on. Management only guided 775 to 8.25 last time. They guided 775 to 825. They were off by $700 million. Management guided $30 to $33. They were off by $9, $6, 30%. They beat their guidance expectations by 30% damn near. This is a huge report. This is a huge earnings report. Why would you not be bullish on Sandisk right now? The only reason is because you're not bullish on semiconductors. And that's totally fine. That's totally fine because look, yeah, the jig might be up. Semiconductors, it might just be over, guys, right? And there is a world in which we see them never really coming back. And it looks like this, and Sandisk just does this. Boop, and then boop, and then boop, and it bottoms somewhere in the hundreds. Sure. But even then, I would still be bullish. I would be willing to buy in these sorts of moments in some sort of pullback. I would actually add Sandisk to my portfolio if you give it to me under $900. No problem. Because look at the revenue they're generating. And their guidance is climbing. The only thing here is guidance. The only thing here is guidance. You look at Q1 guidance, they missed on guidance. That's it. But again, like the thing about it is they always underguide. Look, they guided $30 to $33 for Q4, fiscal year 2024. They came in at $39. So yeah, sure. They might underguide on revenue at 10.7 when the market went at 11.2, but they're probably going to come in at 11.5 if things continue. They guided $45 EPS. Estimates were $45.50. So they just barely missed there. Like barely missed. But still, they're going to outperform it. Sandisk historically does that. And so, yeah, the market's going to beat it down, but I think the market sees through this. That's why I think you're seeing Sandisk go for a bounce here. That's the reason why I think in a moment like this, sorry, I was checking the time. I think that's why you see the dip getting eaten up. And you see people jumping in and willing to accumulate in these sorts of moments when it pulls back and the buyers are willing to step into these sorts of moments because, again, like, yeah, okay, sure. Yeah, okay, 10.7. Yeah, sure. You also guided $7.75 billion of revenue for Q4, and you came out with nearly $9 billion. You were off by nearly $1.2 billion. If they're off by $1.2 billion on the next one, they beat expectations by like $800 million. Man, I can see through all this shit. I can see through all this shit. I'm not, man. Why would you not be bullish on Sandisk after these numbers? I don't know. Especially compared to what we've seen from other ones. This is one of the biggest beats, especially in terms of EPS of any of the semiconductors and memory. Bullish, dude. Bullish. Hey, it's her, Jen. Shout out to Jen. Always love to see you. 289, 295, 296. Okay, you guys are voting like crazy. Votes. 89% of you are bullish on Sandisk. Good. Because look, and I want to make one thing clear. I don't even own Sandisk. I have no Sandisk in my portfolio. Zero. But I can even see through this and be like, we're dumping here? We're dumping after that? Because their Q1 guidance is soft? When they underguide every single quarter? Okay. If you know, you know. That's kind of the response that I'm having right now is like, if you know, you know. Could it maybe continue to pull back a little bit? Sure. Could it start coming back down through this trend? Sure. It could do all those things. I think that's a dip buying opportunity. I think if you give me the chance to buy Sandisk in this golden zone or below, I'm probably going to start adding that bad boy to my bag. Hourly at minus 3.4 on the HCI. 4 hour at plus 144. Where are we at on the daily? Back into minus territory already. But it's not going to, this obviously isn't pulling data, so this is probably like -1 by now. Yeah, dude. Sandisk earnings call in 5 minutes. How are we looking on Western Digital? I know App11's probably going through it right now. This is a good sign. This is a good sign from Western Digital. Those buyers are stepping in, and this is where you want them to step in. I don't know this is going to hold, though, man. I'm not going to lie. This was not a great earnings from them. Sorry, guys. I burp a good bit whenever I eat these, drink these energy drinks. That's not what I was looking at earlier. Hold on. Oh, here, let's just do this. It's just the beat wasn't great. It's like they did beat, but it didn't beat by much. You know, 3.75 billion against a 6.69 billion. So they beat by what? What's that? $60 million or so. It's hard to get excited about a $60 million beat on a $3.75 billion revenue quarter revenue. The trigger for the sell-off was the CapEx reduction announcement in the current environment, where every earnings call this week is being interrogated for signs of AI CapEx peaking. A storage company voluntarily cutting capital expenditure reads as a management signal that the growth trajectory may be moderating. The bull interpretation is disciplined capital allocation and higher future free cash flow. The bear interpretation, which the market is running with tonight, is that WDC is pulling back investment because it sees something softening in the forward demand picture. Okay. The underlying data does not support that berry. Nearline HDD capacity is sold out through the remainder of 2026. Exabyte shipments at 34% growth. Extraordinary fundamental numbers meeting a market that has been conditioned all month to sell storage beats and ask questions later. Yeah. It just wasn't a big beat, right? And that is the world that we're in. And what's going to happen is eventually the market's going to stop expecting massive beats. It's going to stop expecting massive beats. And you'll start to see these sort of earnings reports maybe be a little bit less volatile. But look, I want to be honest with you guys. Anyone who's been in the market for a while knows the stock market has almost always had moments where there'll be a good earnings report that's already priced in and the price of that stock falls. It just doesn't usually fall as much as they have been recently. We've been seeing extreme volatility recently, but pullbacks on beat earnings isn't new. You just need to get used to it, okay? But in a market like we're in right now when it comes to AI, yeah, a beat of $60 million on revenue is just not going to get people up. It's not going to get people excited. Got a quote from Sandisk here. Earnings call starts in 4 minutes, so we'll listen into that. We closed fiscal 2026 with a leading technology portfolio, established data center as a key growth pillar, and deepened our customer partnerships. David Goklecker. Gokeller. Jeez, I said Goklecker, my word. Our technology and products are well positioned to create value for our customers and generate growing and durable free cash flow. They're doing a good job at it, too. Look at that op-ed, comrade. Q4 2026, $7 billion compared to 18 million. Wild. $18 million of operating income in 2025 fiscal year. Wow. What a big jump. Year over year. 8.96 billion gross margin, 80. I can't get over this. You could round the bad boy up to 85% gross margin. That is ridiculous. Listen, they've always kind of in some way been a high margin company, especially when we saw prices for memory get so high. But Jesus, 85%? Are you kidding me? Somebody go back 20 years ago and tell me when a company generating $8 billion a quarter of revenue was doing at an 85% margin clip. Someone go find me one. That is crazy. Wow. All right, let's get ready for this earnings report, huh? Earnings call. Oh, I got to restart this and turn the sound on. so bullish, dude. Oh my God. Why are these songs like, listen, I know my intro song is kind of crap to some people, but God, wait until y'all hear what they're playing right now, bro. Y'all are not going to believe this. Are you ready for this? Listen to what they're playing right now. Shit, kind of jiggy though. I'm gonna leave it on. I'm gonna leave it on. Yes, Drew, that toolkit does work on iOS. Can y'all not hear that? Oh God. All right, hold on. Y'all are gonna like this. You ready for this? Here we go. I'm dancing on my own. That's fire. Y'all cannot still. Y'all still can't hear this? Oh, now we can hear it. I was about to say if I'm dancing alone again, I'm gonna be real mad. That's fine. I feel like someone's gonna kill me in a scary movie with this playing in the background. Hey, I know what it would sound like if we did a Tyler Hill earnings call. You know what time it is. All right, enough of that. Anyway.
Good afternoon, and welcome
That was
to
crazy
Sandisk's
timing.
fourth quarter fiscal year 2026 earnings conference call. All participants will be in a listen-only mode. Should you need assistance, please signal a conference specialist by pressing the star key followed by 0 on your telephone keypad. After today's presentation, there will be an opportunity to ask questions. To ask a question, you may press star, then 1 on your telephone keypad. To withdraw your question, please press star, then 2. Please note this event is being recorded. I would now like to turn the conference over to Ivan Donaldson, Vice President of Investor Relations. Please go ahead.
Before we begin, please note that today's discussion will contain forward-looking statements based on management's current assumptions and expectations, which are subject to various risks and uncertainties. These forward-looking statements include expectations for our technology and product portfolio, our business plans and performance, our capital allocation priorities, market trends and opportunities, and our future financial results. We assume no obligation to update these statements. Please refer to our annual report on Form 10-K and our other filings with the SEC for more information on the risks and uncertainties that could cause actual results to differ materially from expectations. We will also make references to non-GAAP financial measures today. Reconciliations between the non-GAAP and comparable GAAP financial measures are included in the written materials posted in the Investor Relations section of our website. With that, I'll turn the call over to David.
Thanks, Ivan. Good afternoon, and thank you for joining Sandisk's fiscal fourth quarter earnings call. As we close fiscal year 26, we believe Sandisk is in a strong strategic position to deliver for our shareholders and customers. The strategic actions we have taken over the past year have established a stronger foundation through technology leadership, longer-term customer partnerships, financial flexibility, and operational capabilities, which collectively position us well for the next stage of execution, growth, and shareholder returns. Over the past year, we strengthened our portfolio with BiCS leadership across both TLC and QLC and the continued advancement of high bandwidth flash. Established data center as a major pillar of growth, deepened customer relationships through multi-year partnerships enabled by our new business models, our NBMs, with momentum continuing to build during the quarter. We reinforced our supply chain and transformed our business model with a net cash balance sheet and a capital allocation framework designed to generate growing and durable free cash flow to reinvest in the business and return excess capital to shareholders. The fiscal fourth quarter provided our clearest proof point yet. We delivered record revenue, gross margin, and earnings per share, each above the high end of our guidance, and repurchased $4.5 billion of company stock. We are encouraged by this progress and believe the long-term earnings power, cash generation, and resilience of this business will become increasingly evident as we execute against this new foundation. Underlying our performance is the most important force in our market, the era of inference. AI is fundamentally a memory-centric, storage-intensive problem, and it is reshaping the demand equation for NAND. The shift to inference in agentic AI is generating data at a scale that is redefining storage requirements. Every AI interaction creates content that must be stored, retrieved, and served at low latency. And each of these steps relies on data storage products, including our high-capacity enterprise SSDs. NAND is the most scalable semiconductor technology in the world, and it has become a critical component of the AI architecture. This demand is anchored in strategic, long-term infrastructure investments by the world's largest technology companies, which are increasingly working with suppliers who can scale, partner with them, and secure supply that ensures performance and reliability years in advance. These enduring and mutually beneficial partnerships give customers greater confidence in long-term supply while giving Sandisk clearer visibility into demand and a stronger foundation for planning, investment, and more durable cash flow generation. Our technology leadership is how we are capturing this opportunity. BiCS has become recognized as an industry gold standard for NAND, and this year we ramped BiCS 8 to the majority of our bit production, delivering industry-leading performance, density, and power efficiency across both TLC and QLC. BiCS 8 was enabled by innovations like CBA, hybrid wafer bonding, and our roadmap builds on that same fundamental approach, with future generations extending performance and cost leadership through continued innovation across multiple dimensions of scaling. Our leadership is translating directly into customer adoption across our various end markets. We scaled our compute-focused TLC enterprise SSDs across a broad set of hyperscale and AI infrastructure customers. And this quarter, we began shipping our QLC Stargate platform for revenue, giving us a complete complementary portfolio spanning performance-intensive compute workloads and high-capacity AI data lakes. A year ago, data center represented roughly 12% of our bits. Exiting fiscal year 26, it represents 38% of our portfolio and is our fastest growing end market. Our technology leadership also extends well beyond data center. Edge remains a large and strategically important end market for Sandisk, spanning smartphones, PCs, tablets, and an expanding set of emerging use cases in the realm of physical AI, including automotive, robotics, and on-device agentic AI. Near term, both PCs and smartphones are working through a period of adjustment as demand is shifting towards AI-enabled devices and premium configurations, driving higher storage content, particularly in smartphones. In the PC market, OEMs are growing revenue and expanding margin on a more profitable mix, reflecting demand for higher-end devices. We expect these markets to return to growth in calendar year 27, and over the longer term, on-device AI, richer content, and entirely new form factors will continue to expand the role of high-performance flash at the edge. Our ability to deliver high performance, density, and power efficiency positions us well as these platforms evolve, and we expect increases in content per device through future refresh cycles. Sandisk's global consumer presence remains a meaningful differentiator within the industry, giving us a unique connection with end users and channel partners. We continue to invest behind the brand, sharpen our go-to-market capabilities, and innovate around the products, capabilities, and experiences that consumers value. Our ability to innovate at this level is enabled by our operational excellence. Sandisk manages the entire value chain, from the design of the NAND die through front-end wafer manufacturing at some of the largest fab complexes in the world with our JV partner, to system-level design, including our world-class controllers, and final back-end assembly and test, all the way to the hands of our customers. This end-to-end integration, combined with our R&D depth, proprietary BICS systems expertise, and the market diversity that gives us the optionality to direct our technology where it delivers the most value, is what enables us to serve customers at attractive returns. Just as important, we grow supply primarily through nodal transitions rather than wafer additions, delivering mid to high teens bit growth from the productivity of our technology roadmap, with capital intensity that continues to decline as a percentage of revenue. This is a structural advantage and what makes this franchise such a powerful cash generator. With that, I'll turn the call over to Luis for an update on our new business models and a deeper dive into our financial performance and guidance.
Thank you, David. Fiscal year 2026 was a transformational year for Sandisk. We exited the year significantly stronger than when we entered it. We believe that we're well positioned to create sustainable value for customers and shareholders. Our new business models, or NBMs, reflect the stronger and longer-term partnerships that we're building with our most strategic customers, the value they place on our technology and products, and the confidence that they have in their demand. Our revenue growth, margin expansion, and asset efficiency enables us to deliver leading free cash flow per share and therefore generate an attractive return to shareholders. Since announcing 5 NBMs during our April earnings call, we have signed 5 additional agreements, 3 NBMs with new customers, and 2 deals expanding on previously signed NBMs. These extensions reflect our customers' strengthening demand exceeding their prior estimates. One of the 5 signed deals, 3 closed before the end of the fourth quarter and 2 closed after quarter end. In total, we now have NBMs with 8 diverse data center and edge customers and reflect the conviction our customers have in their long-term demand and the value they place on Sandisk. The length of our NBMs varies, extending up to 5 years with a weighted average duration of over 4 years. We expect our NBMs to represent more than 50% of our bids in fiscal year 2027 and approximately 2/3 of our bids in fiscal year 2028. NBMs are quickly becoming our predominant way of doing business. We will continue supporting our non-NBM business with uncommitted supply. Pricing for our NBMs include both fixed and variable elements, with a variable portion subject to floors and ceilings. We expect attractive margins even at floor pricing. Pricing of our non-NBM business will fluctuate with the market. The total expected revenue from all our NBMs we have signed is a minimum of $93.9 billion, assuming floor pricing. We believe actual revenue will be above that minimum. The remaining performance obligation, or RPO, at the end of the quarter was $59.8 billion and would be $91.1 billion, including the 2 NBMs signed after the quarter closed. The difference between the total NBM revenue and the RPO is the revenue that has already been recognized. Each one of our NBMs includes financial guarantees through a combination of cash deposits and financial instruments totaling $16.5 billion, which are intended to protect Sandisk if a customer fails to satisfy its purchase obligations under these agreements. These funds and financial instruments are mostly held by or provided through third-party financial institutions, with the remaining in our cash balance. For each of the existing deals, the financial guarantees are released towards the end of the agreement, so the ratio between the financial guarantees and the remaining performance obligation increases over time. Our NBMs are built on clear and detailed supply and demand agreements, defined by year and by quarter. These features provide clear visibility for our operations and additional financial protection. Overall, we're pleased with the 8 customers we have signed as they strengthen our strategic partnerships. We expect these relationships to last for many years and to enable our customers to continue building exceptional products for their end customers. Going forward, we will remain highly selective in evaluating additional NBMs. The key characteristics we look for are strategic customers that value our products, duration of around 5 years, growing volume requirements, and attractive financials that enable us to invest in the business while generating a sustainable return to our shareholders. We will be patient in these evaluations. With that update, I will turn to the results for the quarter. Revenue for the fourth quarter was $8,965 million, up 51% sequentially and 372% year over year. Revenue came in above the guidance range of $7,750 to $8,250 million that we provided on our prior earnings call. Sequential revenue growth came approximately 1/3 from higher volumes and 2/3 from higher pricing. Turning to our own markets, during the quarter, data center revenue reached $2,977 million, up 103% sequentially. Edge revenue reached $5,432 million, up 48% sequentially. Consumer revenue was $556 million, down 32% quarter over quarter. We're pleased with this evolution of our portfolio and remain committed to serving all 3 end markets to maximize long-term value creation. For the full fiscal year 2026, revenue reached $20,248 million, up 175% year over year, with bits growth in the mid-teens in line with our plan. By end market, for the full year, data center revenue reached $5,153 million, up 437% year over year. Edge revenue reached $12,160 million, up 195% year over year, and consumer revenue was $2,935 million, up 29% year over year. Non-GAAP gross margin for the fourth quarter was 84.6%, up from 78.4% in the prior quarter and 26.4% in the prior year. This compares favorably to our guidance of 79% to 81%. Non-GAAP operating expenses for the fourth quarter were $484 million, representing 5.4% of revenue, down from 7.5% of revenue in the prior quarter as we generated additional operating leverage. This compares favorably to our guidance range of $480 to $500 million. R&D represents close to 65% of our operating expenses. Non-GAAP operating margin was 79.2%, up from 70.9% in the prior quarter. Non-GAAP EPS was $39.25, up from $23.41 in the prior quarter and 29 cents in the prior year. This compares favorably to our guidance range of $30 to $33. We closed the quarter with 157 million diluted shares outstanding. Key GAAP to non-GAAP reconciliation items include a gain of $807 million from our investment in Nvidia and $67 million in stock-based compensation expense. We also recognized a tax benefit of $175 million from higher stock prices related to the vested employee equity, which was offset by $170 million of taxes recognized on the gain from Nvidia. During the quarter, we repurchased 2,836,000 shares of our common stock for $4.5 billion. Moving on to free cash flow. During the quarter, cash flow from operations came in at $7,126 million, partially offset by $153 million from net cash capital spending. Gross capital expenditures totaled $562 million, representing 6.3% of revenue. We generated $5,035 million in adjusted free cash flow, which represents 56% margin. This excludes $1,938 million in NBM prepayments and deposits, which are included in cash flow from operations.
That's insane, dude.
We closed the quarter with $4,762 million in cash and cash equivalents on our balance sheet. With that, let's move on to guidance. We expect the NAND market to continue growing at an accelerated pace, supported by AI inference as a tailwind. We estimate the NAND market will exceed $300 billion in revenue in calendar year 2026, up 3x year over year. Looking further ahead, we estimate that the NAND market will approach $500 billion in revenue in calendar year 2027. Within this time frame, we expect data center share of total TAM to expand from approximately 30% in calendar year 2025 to approximately 50% in calendar year 2026, and to continue outpacing the market in 2027. Demand from our customers is growing faster than our supply. We therefore expect bits to remain on allocation beyond calendar year 2027. For the first quarter of fiscal year 2027, we expect revenue between $10.3 and $10.8 billion, with sequential growth driven by both bit growth and higher pricing. We expect non-GAAP gross margins between 83 and 85%. We expect non-GAAP operating expenses between $520 and $540 million as we continue to invest in innovation and R&D and have higher expenses related to taxes on employee stock compensation. We expect first quarter non-GAAP EPS between $44 and $46, assuming 155 million fully diluted shares. Here is some additional perspective for modeling purposes. Consistent with our long-term objective of growing supply mid to high teens, our capital spending will increase year over year, primarily as we ramp BiCS8 and BiCS10. Yet our investment relative to revenue will come down to approximately 6% for the full year. We plan to operate at higher inventory days, consistent with current levels, to support our NBMs and account for higher component costs. The higher inventory levels reduce sellable bits to mid-teens for the full year fiscal year 2027. Moving on to capital allocation. Our priority remains to invest in the business to support long-term growth and durability. We will continue returning cash to shareholders. Sandisk Board of Directors has authorized an additional $14 billion share repurchase program, bringing our total remaining authorization to $15.5 billion. We look forward to seeing many of you at our Investor Day in New York next week, where we plan to review the business in greater detail. We're encouraged by the progress made and remain committed to creating value for customers and shareholders. With that, let me turn the call back to David.
Thank you, Luis. In summary, fiscal year 2026 was the year Sandisk redefined what this franchise can be. We delivered record financial results, established data center as a major pillar of growth, secured our manufacturing and supply base through the next decade, and fundamentally restructured how we transact with our largest customers. The value of our technology, built on decades of R&D and tens of billions of dollars of cumulative investment, is increasingly being reflected in our financial results. As we enter fiscal year 2027, we do so with a balanced, well-structured portfolio spanning data center, edge, and consumer, one that has served customers across every part of the storage market for decades and gives us flexibility to move wherever demand grows next. We have industry-leading NAND technology across TLC and QLC, with a roadmap of continued innovation extending our leadership. And we are investing beyond traditional NAND in emerging technologies like high bandwidth flash that carry the potential to change the AI memory storage hierarchy entirely. Combined with our NBMs, a net cash balance sheet, and an active capital return program, the result is a durable growth model, a valuable franchise, in a business built to generate substantial increasing cash flow. We're proud of what the team accomplished this year and believe we are still in the early innings of this opportunity. With that, Ivan, let's open it up for questions.
We will now begin the question and answer session. To ask a question, you may press star, then 1 on your touchtone phone. If you are using a speakerphone, please pick up your handset before pressing the keys. If at any time your question has been addressed and you would like to withdraw your question, please press star, then 2. At this time, we will pause momentarily to assemble our roster. The first question today comes from Ben Reitz with Melius Research. Please go ahead.
Yeah, hey guys, how are you? Thanks for the question. I wanted to ask maybe two things. Last quarter you talked about the MBMs were being signed in this 80% margin range. I know there's a lot of puts and takes with regard to pricing. I was wondering if you can talk about whether it's in that ballpark or if it's kind of trending actually more towards the guidance for the next quarter. I would think it's more in the 80 ballpark. And then I have my follow-up is with regard to buybacks. If we just round up to $5 billion per quarter, I know the authorization isn't this big, but if you commit to buying $5 billion a quarter, that's, and you do that over the next 4 quarters, that's about 10% of your market cap. I mean, is that the kind of buyback magnitude we should be thinking of, or is it too early to kind of call the pace? Thanks.
Hey, let me take the second one, and then Luis can take the first one. So we plan to be, we're walking into the buyback program. We're our second authorization now. You saw we had a $6 billion authorization. We executed $4.5 billion in the first quarter of that. Now we've reauthorized another $14 billion. We expect to be very consistent in our execution of this program. We have a lot of confidence in the cash generation of the portfolio. Ben, to your first question, and Luis will talk about the margins, but we spent a lot of time over the last 2 or 3 quarters really working very, very deeply with our largest customers on committing demand. We have over 4 years of visibility now, so we feel very good about where the franchise is. And I'll just speak personally as somebody that's been managing this franchise since March of 2020. I am thrilled to be at this point where we're recognizing the true value of this franchise and really ramping up the shareholder returns. But Luis can talk about the margin.
Yeah, Ben, we, not to pick a specific number, but we do expect to be around 80% for the new business models. As you know, there is some upside as prices continue to go up. We'll capture some of that upside as well. But we feel very good about the work we've done. We'll talk about about the MBMs, I'm sure, but you've seen there are not a lot. There are really meaningful deals that we did with 8 very strategic customers of ours. So we feel very good about that.
Thanks a lot, guys. Appreciate it.
Sure thing. Thanks, Ben.
The next question comes from Mark Newman with Bernstein. Please go ahead.
Hi, thanks for taking the question. For your Q4, I don't think you've given, obviously Q4 strong results. I don't think you've given the breakdown yet on the volume growth. You've given some numbers for the year, so we've got some pretty good estimate. But I wonder if you could give some clarity on what's in there for Q4 for volume, and also in the Q1 guide, particularly for the Q1 guide. It seems a bit lighter compared to expectations. If you share price been down a bit last time I checked in the post market. I just wondered if that is volume related or if that is because the locking in of pricing and so less price upside, or perhaps a bit of both, or is it a bit of conservatism? Really appreciate it. Thanks.
Yeah, so in Q4, Mark, what we mentioned is that about 1/3 of the growth came from incremental bits and 2/3 came from pricing. So you have that split there. And obviously, as you compare us versus others, there is a different timing on when price increases were taken. So you have to look at things over several quarters to really understand where we are, because as you know, we took significant pricing the prior quarter. If you look at Q1, we expect both the growth to come from both bits growth and modest price increases. So we expect both of them to be contributing to our revenue growth.
Okay, great. Thanks very much.
Sure, Mark.
The next question comes from David Gibson with MST. Please go ahead.
Thanks very much. Great quarter. Two questions. I'm just wondering if Nvidia's context memory CMX standard and their plans for storage next are opportunities for you with products to come. And then the second, you announced the other day the global standard with SK Hynix for HBF. Just wondering how far out are we talking about for samples of such a product? Are we 1, 2, 3 years away? That's my question. Thank you.
So David, sure. So look, there's a ton of innovation going on right now in inference memory architectures, which we think is fantastic, very healthy. There's a lot of different ideas. We're gonna dive into this a little deeper next week at our Analyst Day, where we'll actually go into how we think about the problem and kind of how you dimensionalize it. But yes, all these are opportunities for us. We think, especially inference is a memory-bound problem. Storage is extraordinarily important to the equation. We showed some stuff in our FMS keynote just a couple of hours ago about how when you use HBF, how we simulate performance and maybe break through some bottlenecks. So we think there's an enormous amount of innovation happening. As we scale inference, we think it provides an enormous opportunity. The biggest thing, the way we're thinking about this is staying very close to our customers, because they're going to be the ones that define what the architecture is in the future. I mean, all of us as suppliers will provide a lot of good ideas to that. We'll work with them closely on, which ones are going to be the predominant ones for what they're optimizing for. And these are really where our NBMs, we think they're extremely important in that we have NBMs with, several of the largest hyperscalers in the world. They've given us forecasts years into the future that include, quarter by quarter, month by month mix. So we know very clearly what products they're going to deploy and the intensity that they're going to deploy them in. And it keeps us very close to the conversation as their deployment architecture changes. It lets us reflect that in our roadmap appropriately. So, there's a lot of good ideas out there, a lot of, flashing green light for innovation. We know we're a super innovative company, and we think that provides nothing but opportunity. Now, on your second question, HBF is something that, we announced almost a year and a half ago now. It was very much targeted at this whole idea that inference was going to require a different storage and memory architecture. We feel very good about where that product is at. We'll tell you a little more about, where we're at specifically next week, but we feel very good about deep conversations with customers. This week you saw additions to our advisory board. At FMS, you saw some very significant customers talking about the technology and how they could use it. So we'll have more to say as we progress with technology on actually shipping and release dates and all of that. But from where we were a year and a half ago, that this was an idea and a lot of research and some work that we thought it was a great idea, to where we are now, we've come an enormous distance, and we'll talk more about that next week.
Okay, that's great. Thanks very much.
Thank you. Thank you, David.
The next question comes from Jim Schneider with Goldman Sachs. Please go ahead.
Good evening. Thanks for taking my question. When you think about the composition of NBMs you've already signed and the ones you may intend to sign, how are you thinking about the mix of desired customers you'd like to see across edge, hyperscalers, AI data centers, and so forth. And maybe can you talk about whether you're pursuing additional agreements with large hyperscalers beyond the ones you've already signed?
Yeah, Jim, we're open to signing deals with companies that really meet the criteria that we talked, right? One is they need to be customers that are highly strategic, that they really value our products, and they're creating amazing products with those. We want customers that are looking at several years, ideally 5 years of agreement with growth, year-over-year growth. That's very important because every year we're producing more bits as we introduce new nodes. So we want customers that grow with us, and we want attractive financials. So that's the criteria, but we're not close to any segment. As I mentioned, we signed deals with customers across data center and edge, and we feel great about that. In terms of the hyperscalers, I'm talking about specific agreements. I think it's not in our interest to be disclosing specifics about contracts, but we feel great about each of them. They are, as David said, long-term relationships that are getting to a level of details that we've never had before from a technology, from a commercial point of view, and we believe that these relationships will last many, many years.
So, Jim, just a few more comments on that from my perspective. So, first of all, we really started this journey just two plus quarters ago. Here we are with a little bit more than 50% of our supply for fiscal year 27, which we're a month in now, is already committed. We understand the financials. We understand exactly where it's going. We already have POs for the year from those customers. In FY28, that steps up to 2/3. Roughly 2/3 of our supply is already committed. We understand what the mix is. We understand what the economics
that's
are.
Crazy, man.
So we feel like we've just made incredible progress here on, taking, a year ago, we were talking about visibility in this business of 3 months. And now we're talking over 4 years of committed financials and understanding the mix and working with, as Luis said, some of the most enviable companies in the world. So we feel really good about where this is at. And, we'll continue to talk to customers. I think one of the most interesting dynamics is some of our biggest customers are already coming back and wanting more, right, from just what they thought they needed 3 months ago. It's a very, very robust demand environment, especially in the data center. So we feel good about where we're at. But we're getting a lot of the portfolio spoken for at this point, and we'll be selective from here about how we add to it. But we're definitely still in deep conversations with additional customers.
Thank you. And then could you maybe address capital allocation at a somewhat more holistic level? I mean, it's great to see the buybacks you've already executed in terms of the authorization, but how should we be thinking about your ability to do sort of more programmatic buybacks on sort of an ongoing basis, and maybe talk about the idea of a dividend if you've considered that?
Yeah. So our priorities continue to be the same as what we've talked since day one, which is to first continue to invest in the business. And although that's a generic statement, you've seen us do that, right? Through our OpEx, through our CapEx, through investments in Nanya, through our JV extension. So we continue to make our company more robust and more durable over time in any scenario. So we'll continue to do that. And I've talked about some of the numbers, some of the requirements to continue to invest in the business. Priority number 2 that we've talked, which is frankly completed, was to get a good cash balance, which we've done, and to get rid of our TLB, which is also done. So that priority number 2, we feel very good of where we are. And then really our role as a company is to return cash to our shareholders. We believe that at this point in time, and things may change, as time goes on, we believe that the best way to do it is to return cash to investors via share buybacks. So we started that journey very quickly in last quarter, and we'll continue that journey, and we'll keep you updated. But that's the form we believe it's better for our shareholders, more tax efficient, and probably the right thing for us to do at this point in time.
Thank you.
Thanks, Jim.
The next question comes from C.J. Muse with Cantor. Please go ahead.
Yeah, good afternoon. Thank you for taking the question. I guess two questions. First, with pricing up modestly sequentially, can you help me understand why gross margins are guided lower? And then bigger picture, the challenge for semi investors is moving less of a focus on margin and EPS revisions, but rather buying into the durability of this cycle. So can you focus on why you're so confident in the securities of NBMs and that today's supply is limited and that will drive a durable and elongated cycle? Thanks so much.
Yeah, so I'll start and Luis can add on. CJ, I think you answered your first question with your second question, which is we're focused on multiple things here, not just one. As durability is a big piece of it. We want to get, a fair return for our product. I think, mid-80s gross margin, I would characterize as a fair return. And then we want to increase visibility and durability of the franchise, right? We want to get this kind of, boom and bust out of it. It doesn't work for anybody. In 23, we were having very different earnings calls than we're having now. And, we want to get more consistent and deeper relationships with our customers so we can plan better and they can plan better. And so, we're executing what we said we were going to do last quarter. We're committing supply to customers that are willing to commit for years in advance at the economics we guided to last quarter, which Ben said earlier. We guided to about 80% gross margin. And then, the rest of the portfolio floats. And then there's, all kinds of things that happen in their mix and all different kinds of things influence it. It's a, fairly complicated business. So when you put that on top of half the supply is committed for FY27, you get to kind of the numbers we're talking about, which we're thrilled with, quite frankly, because the amount of, the operating leverage, operating profit and free cash flow that drives is very substantial. And again, we'll go into why that's the case a little more next week. So why do we have conviction that these, customers are going to hang in there with us? There's lots of reasons for that. Number one is we put a contractual structure in place where we align our incentives. They're making financial commitments to us that if they don't follow through on their commitments that, I think $16.5 billion in aggregate would flow to us on our balance sheet. We don't ever expect to see that money, quite frankly. It's just to align interests. But if some black swan event happens, companies have to do what's in their interest and maybe something happens. But more importantly, we're dealing at a very different level with our customers than we were a year ago. I mean, we are literally talking to the CFOs, the CEOs of the largest companies in the world. This used to be, quite frankly, just a supply chain conversation every quarter in a, price negotiation 7x24. The business has turned into a highly strategic, Sandisk has incredible products that allow them, our customers, to build incredible infrastructure to serve the world with, things like inference, which is, we're just getting started on scaling. So it's, as somebody that's been in the technology industry for 35 or 40 years now at quite frankly, a very high level, the level of customer engagement we have is as high as any technology franchise I've ever been a part of. It's incredible. And so we believe that, we have pivoted to a highly strategic supplier to our customers. Their demand continues to grow. I think one of the more interesting things, again, I think I said it before, we've already have customers coming back for the second round of NBMs, a quarter in. And so that gives us an enormous amount of conviction that this franchise is set up for the long term. We have over 4 years of visibility now at economics, which are extremely attractive. And, we're really looking forward to, executing this business over the next several years.
The next question comes from Joe Moore with Morgan Stanley. Please go ahead.
Great, thank you. You talked a little bit about gross CapEx coming up a little for the BiCS8 and BiCS10 transitions. Can you just talk about how you think about that and the fact that, the guys who also make DRAM seem to be focused more there? Any thought of spending more to accelerate those technology transitions, or just how should we think about your decision-making process on CapEx?
Yeah. So Joe, basically we continue to be committed to grow bits mid to high teens, right? And we're spending to that level. The reason why our dollar increases from one year to another is because obviously as you transition from one node to another, you will first take the easiest, right, or the cheapest transitions, and then you would go on and do the more expensive ones. Particularly when we had, underutilized the fabs in the prior year, we had some tools that could be reused, and we were in a good place on that spending. So we're very good. We continue to execute the plan that we had. We believe that's the right plan to do it, that allows us to provide the bit growth that we believe is sustainable in the market, and we haven't changed that position. Now, this year, as I mentioned in my prepared remarks, it will be a little bit lower. I mentioned mid-teens as we continue to build capabilities for the new business models. We need to build a little bit of inventory just to make sure that we're always delivering on time. So that mid to high teens, which is our ongoing number, will be a little bit lower for 2027.
Okay, so if we think about a $500 billion kind of industry number for next year, do you think you would, between the different puts and takes, kind of hold segment share relative to that?
Yes,
this year?
that is correct.
That's always our goal, Joe.
Okay, great. Thank you.
Thank you.
The next question comes from Karl Ackerman with BNP Paribas. Please go ahead.
Yes, thank you. I have two related, so I'll ask at the same time. Consumer revenue is down a bit this quarter. Is that allocation choice or demand driven? And how should we think about the dollar commitments of these contracts relative to the perceived consumer customer demand through 2028? In the absence of LTAs, how do we gain greater visibility on end market consumer demand? Thank you.
I'm not sure if I got the last portion of that. Would you mind repeating that one, Carl?
The consumer one first, Carl, and then we'll come back to you. So,
sure.
Consumer is a business that it doesn't move at the pace that the transactional markets move at. It's kind of an interesting business because in normal times you can move pricing and consumer around much more quickly than some of the other markets. But in these kind of markets where the other ones are moving so fast, it's hard to move the consumer up as much as possible. So there's no doubt we're seeking at where is the right equilibrium point for pricing and the amount of product shipped and all these kinds of issues in consumer, and that's a little longer process than in some of the enterprise markets. Luis, you want to add anything to that?
Yeah, I mean, as you can imagine, prices on the consumer market have also come up, and there has been some impact on the TAM itself. We're very happy with that business. It's going super well. We're very happy about our market share within that market, and we continue to be committed to drive that business. Do you mind going through your second question, Carl?
Yes, Luis. I was asking, you gave some very substantial numbers with respect to long-term agreements across your customer base. And I was wondering how we should think about the dollar commitments of these contracts relative to the perceived consumer customer demand of these LTAs. And in absence of LTAs, how do you gain greater visibility on end market demand for consumer? Thank you.
Yeah, so the LTAs or the new business models are not related to the consumer business. If you are questioning whether the new business models were taking bits away from the consumer market, is that what you are asking, Carl?
Oh, no.
Yeah, I think we feel very good about the demand that our customers with NBMs have. Otherwise they wouldn't be increasing their demand to us just a few months after they sign their commitment. So if the question is on their demand, I feel very good about their confidence, their conviction on their demand as these numbers. I think they are actually being conservative as they make commitments to us as they come in and increase their numbers, just a few months after signing the deals.
Great, thank you.
Thanks, Carl.
The next question comes from Aaron Rakers with Wells Fargo. Please go ahead.
Thank you, guys. This is Michael Svednoff on Aaron's behalf. I wanted to ask, it sounds like you guys have significantly improved your visibility. You keep mentioning, greater than 4 years. So I'm curious, with that and kind of your thoughts on supply growth, when do you see industry supply demand converging? And kind of how has that view changed relative to 3 months ago? Thank you.
Well, I mean,
converge to every quarter.
Yeah, I mean, industry supply and demand converges all the time, I guess, right?
Yeah.
I mean, that's the way the market works. I think if you're saying is supply going to increase so everybody gets everything they want at the price they want, that's a much more complicated question. Look, I think this is really, there's a lot into the question you're asking, and I don't mean to make light of it at all, because we take this very seriously. And this is really a big part of the NBMs. I think the thing that we've struggled with is to understand what is demand 5-10 years from now. And when the business is transacted on a quarterly basis, that's very difficult to do, and it's very difficult to get wrong. And if you get it wrong, the implications are kind of tragic, right? We saw that in 23. Right now we're seeing, maybe people didn't anticipate that things were not going to be as available as they thought, and the market's reacting to that. I am actually extraordinarily optimistic that the market is reacting at an incredible pace. I mean, again, if you just think 3 quarters ago, 4 quarters ago, this whole market was transacted quarterly, and now we're sitting here saying we have 4+ years of visibility, and we have customers signing up for 5 years of demand. That is exactly how supply and demand is going to get matched. It's not going to get matched at, quote, the industry level. Like we keep saying industry this, industry that. It's going to get matched with customers and suppliers having deep discussions about supply and demand and how do we get those aligned. And I think we've taken 2 very big steps down that path over the last couple of quarters. As I said earlier, the level of strategic engagement with our customers, it is difficult to comprehend how advanced it is versus where it was 2 or 3 quarters ago. So I think we're making incredible progress on this, and we're going to follow our customers. That's the simplest way to kind of run a business, right? We have customers. We now have relationships with 8 customers that are some of the, they're just incredibly large customers, and they're going to give us visibility of what their demand is. As I say sometimes, they need NAND, we build NAND, right? It's a match made in heaven. We just need to get the economic model figured out, and we are making extraordinary progress on doing that. And I expect that that's going to continue, and we're going to continue to have those discussions, and that will inform our investment decisions.
Thank you.
The next question comes from Blayne Curtis with Jefferies. Please go ahead.
Hey, good afternoon, guys. I had 2 questions. I want to ask on Edge. Obviously, the PC smartphone markets are, probably going to be down for most people in the back half of the year. How are you thinking about that segment? And I guess, can you just speak to the strength you're seeing? I know it's broader than just those end markets. So what is going well, and how do you think about, the markets that'll be down over the next few quarters?
Yeah, I mean, they're great markets, first of all. Again, I've said this before, this is one of the great things about the NAND business. It's got tremendous diversity of markets. Smartphones, PCs, very, very important. There's no doubt those markets are adjusting this calendar year. And we said it in the script, we expect them to stabilize next year. But we see units down mid-teens for both smartphones and PCs this year. But we still see, in smartphones, we see average capacity up significantly, mid-teens, and in PCs we see it flat. But then next year we see, units flattening out in both businesses, both markets, and then average capacities going up. So we see the market adjusting this year, and then next year return to overall exabyte growth across both. So again, the market's adjusting to kind of the reality of where the way the industry works now, and I think it's happening pretty quickly.
Thanks. And then I just wanted to go back to a prior gross margin question. I'm trying to understand, the margins are down modestly, but pricing's up. I just want to understand, is it the impacts of these new business agreements that's kind of, capping the, leading to the modest growth in ASP? And then even with that, is there any other factors that are contributing to gross margin in September?
Yeah, I would not assume that our new business models are a drag on gross margin. They're good margins. If you look at where we come from, right, the last 5 quarters, we've expanded gross margin every single quarter, starting with 22.7 all the way to 86.5. So we feel that we're driving gross margin. We believe it's one of the most important metrics to drive the financial health of the company. Now, if you look at, some of the reasons on the math that you're questioning, right? I mean, there's some mix. There is the high end of the guide is 85, right? And so it's a little bit off versus what we just printed. And we're making some prudent assumptions, if you wish, on component cost and other things. And when we factor all of that in, we believe that the right guidance to give you is somewhere between 83 and 85%. So slightly down, slightly up from what we printed this quarter, driven by all these factors.
Thank you.
We ask that you please limit yourself to one question. The next question comes from
I was about to say, bro asked like 4 questions.
Please go ahead.
That was kind of timely to go to one, but
Wamsi, you got stuck with the one question, man.
Well, I will ask a 2-part single question.
Okay,
that's good stuff, dude. That's funny shit.
So you have an industry forecast here of the NAND industry growing to $500 billion in 27 from $300 billion in 26, and we know that your bit growth is really not meaningfully accelerating for the industry. So just as the assumption that there is going to be any price normalization that we expect in 2027 or not, that's like the first part of it. And the second part is, in that growth of the industry, is your expectation that you would outgrow the industry in line or undergrow the industry as you think about that market growth? Thank you so much.
We want to grow with the market. We plan to grow with the market. Look, I mean, Wamsi, we're transitioning our business into a more predictable business. We're working on pricing and predictability and duration, and so we expect to grow with the market as it goes and increase our visibility. We continue to see very robust demand through the end of 27 and into 28. I mean, customers are giving us demand signals for all the way out to the end of the decade at this point. So, I don't know what more to say about it. We're going to grow with the market, and as we grow with the market, I think we're turning in market-leading profitability. And we've got our bit growth plans. As Luis said, we're going to be carrying a little more inventory as we go into these NBMs, which will have an impact on growth in the near term. But we continue to see a very robust market, and it gives us this opportunity to both continue to drive significant profitability of the business and increase the duration of our visibility very significantly.
Okay. Thank you, Dave.
Thanks, Wamsi.
The next question comes from Asha Merchant with Citi. Please go ahead.
Oh, great. Thanks for squeezing me in here. David, I think in the past, Sandisk has talked about, the KV cache opportunity. Can you just remind us how you're thinking about it? Clearly, agentic AI is gaining a lot of traction here. I'm here at FMS, and seems to be a lot of discussion around there. Has your views or dialogue changed over the last quarter as it relates to and how you're thinking about this KV cache opportunity into 2027 and beyond? Thank you.
Yeah, it continues, Ashiya. It continues to mature, I would say, and that's with staying close to the customers because it's use case dependent on how much KV cache is going to be, how it's going to be used, how much NAND is a part of that equation, how do you configure the system, and we continue to do an enormous amount of research in this area, and you'll hear more of that next week. But we just continue to get more optimistic on the requirements for NAND as AI gets more sophisticated, models get bigger, context lengths get longer, and then agentic is just a big multiplier on top of that. So we continue to get more bullish on the requirements for NAND. And again, this is why I'm going to keep going back to the same theme. This is why it's so important to stay close to our customers, because I am a very, very big believer now that the customers are driving the requirements in this market. It's not what the suppliers are coming up with on different architectures and those kinds of things. Now we're talking about scaling inference globally, and that is very, very difficult. And to do that and understand exactly how that system is going to work, you need to really understand the use case. And that's different for each provider. So again, why, it's the reason why we're staying so close to our customers, why we're increasing our visibility, because we're going to need to stay very close to those architectural discussions. They're evolving very quickly, and the demand continues to get stronger. Again, witnessed by we have customers coming back, after only one quarter and wanting to increase their demand for the next 3 to 5 years based on what they've learned in the last quarter. So it continues to be, it's quite a complicated calculation. We're going to try and demystify it a little bit next week with how we think about it, and it continues to be a very strong story and getting stronger.
The next question comes from Vijay Rakesh with Mizuho. Please go ahead.
Yeah, hey, David and Louis. Just a two-part question here too. When you look at the BiCS10 and high bandwidth flash, wondering if you're seeing any price premium on that, and how should you look at the price premium versus conventional NAND, I guess. And then you mentioned that 2027 growth, you should be in line with industry. What would drive the upside for you, I guess, versus the industry growth? That's it. Thanks.
I think it's a little early to talk about pricing on some of those nodes just yet, right? And some of that technology, but we'll keep you updated on that. We're certainly very proud of the technology. BiCS10 is a great node. We just announced it, I think, last week or last couple of weeks, and it's been in development for a long time, and it's great. Again, Alper's going to show you more about that next week as well. In high bandwidth flash, we continue to have deep engagements, both with cloud customers and device customers, about using that technology as an inference platform. Look, we grow, Vijay, we grow through nodal transitions, right? I mean, our technology is so productive. We can grow in excess of the market rates we're talking about just through nodal transition. So that's the way we grow. If we're going to speed up or slow down nodal transitions, even that still takes a significant amount of time, but that's something we always look at and allows us to kind of always stay in line with where the market's at.
This concludes our question and answer session. I would like to turn the conference back over to Ivan Donaldson for any closing remarks.
Yeah, I'd just like to say thank you to everyone for joining the call today, and we look forward to speaking with everyone throughout the quarter.
The conference is now concluded. Thank you for attending today's presentation. You may now disconnect.
Do. Yo, the chat got it's so funny how towards the end of earnings calls, you guys get like kind of tired of hearing them talk about stocks. God damn, got a little crazy something going on there. It's so funny how you guys kind of get over it. I can tell you're over it because we start talking about everything other than stocks. Like, I do love hearing about stocks, like what, because I can always pick out small pieces during the earnings call. But the reality is this, right? Like, if you read a company's earnings report, then you get on the call, everything that they're saying is the same thing that's in the earnings report because they can't really say things that aren't cleared, right? So I always like to listen to it to pick up on small things, but a lot of the time I'm kind of just reading what you guys are talking about. And dude, just now we're like talking about our dream cars. We're talking about freaking what was this fella's name? Satya is telling us how the world's gonna end and we all need to get out of Earth. Like, yeah, this is just funny. Oh my God. That I love when earnings calls are on and we're all chatting in the chat. It's such a good time. But anyway, let's get into a bit of a recap here. I got a little bit of a report for you guys. Hey, before we get into the report, thank you all for liking it. We have now crossed a whole bunch of likes, so thank you guys so much. Quick little jump into the price charts. We got Sandisk going a little bit of a pullback right now. WDC continuing to trend downwards a bit, and then AppLovin trending back upwards, which is so stupid, right? Like, their earnings report actually sucked, and they're now back up bottom to top 15%, whereas Sandisk was actually good, and what's it called? It makes sense, though, and I'll explain that in a second. Okay, let's do a quick recap. Look. You know, like, Satya, we're good, bro. We're good. If the world ends, I won't be here to see it anyway. Okay, let's get into it then, shall we? So let's go Sandisk first, Western Digital next, AppLovin third. Okay, these are the three big AI players that reported their earnings over the last few hours. Sandisk came in very good except for something. Okay, that's the way I'm going to describe this. Very good except for something. Let me explain. Revenue came in from Sandisk at $8.97 billion, beating analyst expectations by over $570 million. Absolute smash of a beat. Earnings per share came in at $39.25, beating expectations by $34.06. So, I mean, that's a lot. I mean, we're talking a $4 or $5 beat there. Gross margin jumped up to 84.6%, beating expectations by 80%. And the cool part is they were saying on the calls, which is, again, why it's important to listen to calls, that their NBMs are not expected to drag down growth margin. NBMs are new business models for Sandisk, okay? So they're like releasing some of these newer business models to continue to diversify out their income streams. And they believe that these NBMs, new business models, are not going to drag down their growth margin, their gross margin, which is a great thing, right? Because what you don't want to see is that, let's say this whole memory thing is cyclical and they go in a bit of a downtrend here in terms of the supply demand curve. So their premiums come back down and the commoditization of memory does take a part. What you don't want to see is them also have these other like newer business models that they start to lean heavier on. But those other business models are like 40% gross margins or 50% gross margins. So it makes them just not as good of a company in general. If they can have NBMs that are still sitting pretty high in terms of gross margin at the same time that maybe, you know, say their memory is starting to pull back a bit, it is a good thing because it'll cancel it out a bit and Sandisk still survives that cyclicality a bit more. So that's great. That's actually really, really, really good news. I'm glad we listened in and heard that because it does still make me pretty confident in Sandisk, and I do really like that. So it was a great earnings report. Now, when it comes to revenue guidance, they did miss a little bit. Okay. The market was looking for them to release $10.62 billion worth of Q1 2027 revenue. Remember, we're not talking about calendar year. We're talking about fiscal year, which start, it's like Q3. Okay. Q3 on the calendar year is Q1 fiscal year. They reported 10.55. It came in at 10.62. Sorry, let me mute my phone here. It came in at 10.62. So the market doesn't like that, obviously, because it's like, okay, great. All these numbers are good. But if you don't believe that this is going to continue to accelerate at the pace that we want moving forward, that means that this whole AI thing is indeed slowing down, which is one of the underlying fears here in the market. And that's why you'll see a Sandisk pull back and then continue to sell off moving forward because people are a little bit nervous about what the future looks like. The thing is, though, Sandisk has been falling already because people are nervous that the AI wave is pulling back. That's the reason why Sandisk has started falling anyway. This maybe just quote unquote adds to that narrative a little bit, but it doesn't start that narrative. And it's the part of the thing where I'm like, I think this is already priced in. I think this is already priced in many ways. And sure, maybe Sandisk ran a little bit hot and you're getting a bit of a rejection here, but one way or another, I don't think this is new news. And another thing to consider is Sandisk has a history of underreporting. Just go look at their history of earnings reports. Go look at their earnings reports. When's the last time they missed? I don't even have the last time they missed on this chart. Like, they have a history of beating by a good amount. They beat last time on earnings by 60%. No, that was not last time. My bad. I'm looking way back. No, it is last time. Yeah. Of course this was. But they always underreport. Like, always. Their guidance is always under. And then they come out and smash it. Look at what happened here. Because I think they guided like 7.75 billion or something. They beat by 1.2 billion. So I see this and I go, okay, we'll see about that. I would expect them to come out and smash that next quarter and continue this trend. So to me, I get why the market's punishing it a little bit. Because it's already nervous about future, but I don't see it. I'm not personally. Look, if Sandisk was up here, I'd be like, oh shit, this is time to sell, right? Because they're underguiding a bit. The market's not going to like that. A Sandisk that's already sitting down 45% from its all-time high makes me go, I don't think this is going to cause this to like fall. I don't think Sandisk is coming like $500 because of this. I don't see that personally. I don't think that would make a lot of sense. So yeah, I actually do think that if Sandisk does continue to pull back from here, this would be a decent buying opportunity, and anything close to $1,000 would feel pretty good to me. Anything close to that low. You have a golden zone down here between 1130, 1062. Not quite sure if it does come down here, but it could. So that would maybe be where I would even consider start opening up swing trades. I don't really want Sandisk in my long-term portfolio. I'm good on it. I don't want semis in my long-term portfolio right now. Something terrible would have to happen to them for me to start building into them. But all in all, I think after today seeing this, if I'm a Sandisk holder, I'm feeling very, very bullish about my holding. This would be something I'm very, very bullish about. Western Digital came in and it was a beat across the board. It just wasn't a very big beat, especially when it comes to revenue. They reported 3.75 billion on actual revenue, came in a little bit over analyst expectations. What's that? $60 million. They beat it by roughly. Non-GAAP EPS came in at 356, beating analyst expectations by 329. So that was a decent beat, and it goes to show that the margins are looking good. Their Q1 2027 guide is at $4.1 billion, beating expectations by $3.9 billion. So on the year, they did really strong here. The only thing about it is that it just wasn't that big of a beat, right? I mean, you go look at the amount, go look at what Sandisk reported, right? We're talking about a beat of $600 million. You got then this thing turning around and doing a $60 million. So it's like Sandisk beat on revenue by 10 times more than Western Digital did, yet Western Digital is only like 40% the size of Sandisk, meaning that if they were going to compare it to Sandisk, they would have done 600 million, 40% of 600 million is like 200 million-ish, somewhere in there. So they would have had to come in at like 3.9 billion-ish, 3.9 billion to make the market happy. So 3.69 billion or 3.89 billion, roughly. It was just a bit of an underperformance. Now, they're in very different markets, but because Sandisk is kind of like a break-off version from Western Digital, and it's in some ways an old parent company, I think people are just comparing the two. And so, of course, Western Digital got smashed as a result of it. But I will give them a lot of props. That EPS is flying. They're doing a very good job on their margins, and I think this is good for them. But naturally, the market's not going to reward them because it's just not that amazing of an outperformance. It's kind of like AMD in a way. AppLovin missed on revenue. AppLovin's actual, this is a software play, by the way, came in at 1.92 billion. Analysts were expecting 1.94 billion. Came in a little bit under expectations. The market doesn't like that. Adjusted EPS did slightly beat, which is good. I mean, it does go to show that their margins are fine. But at the end of the day, the market does not want to see that. The market wants to see this better, bigger, 2 billion, right? 2 billion is what the market would have been looking for. And it just didn't get it. And it makes a lot of sense as to why you saw AppLovin pull back. Now, they did guide really high. AppLovin basically said, yeah, like we kind of did sucky this last quarter, but we are expecting this to move forward in a very positive way. And I think that is why you are trending upwards on it right now, because the market's trying to price in that future guidance. So it's like, okay, big crash because it's kind of done shitty, but now it's trying to price in that future guidance. I wouldn't feel super confident here, though. To be honest with you, it just wasn't really a good earnings report. So overall, not going to lie, they all did deliver in a decent way. AppLovin with future guidance, Western Digital in general, and Sandisk in terms of earnings and kind of future projections. But not a great day, to be honest. Sandisk was outstanding. Its EPS was outstanding. Again, it's just this dampens it. A little bit in the eyes of the market. But for me personally, I look at this and I go, yeah, they're going to beat this by like $500 million probably. It wouldn't shock me to see them come in at $11 billion in Q1. I genuinely wouldn't be surprised, which is over the expected guidance and probably what analysts are going to expect. They're going to probably beat next quarter. So for me, like, I do feel very bullish about this, but I think I have a bit more of a rational perspective on something like Sandisk. I don't think the market is feeling very rational right now in general, hence why you're seeing it sell off right now. So for me, I would probably pass on AppLovin. It is one of those things like, look, it is down 20% in a day, so it could easily see some sort of recovery, but the truth is I don't love the fact that they're missing guidance or missing revenue, not right now. Not while everyone else is beating revenue, except for a few. I think, especially in software, you look at what Palantir is doing, you see what some of these other software plays are doing, they could be doing a bit better. So I'm not feeling super great about AppLovin, not going to lie. In that regard, Western Digital, it's not very exciting. I mean, I do think that it is in a buy zone now that it's in this golden zone between 466 and 420. I would personally be willing to accumulate here. Like, I would be willing to purchase here, but you have to be aware of the risks, right? Like, you have to be aware that if it breaks through that golden zone, you're probably going to see it come under $400. So cautious purchases are fine here if you are bullish on Western Digital, but I personally am just like, I'd rather buy Sandisk. That's just the way that I look at it. I think the tech is more exciting. I think the upside's more exciting. They beat by more. I'd just rather be in Sandisk. And then again, yeah, when it comes to Sandisk, I am actually feeling really bullish. This is eschatonics. When it comes to Sandisk, I'd be feeling pretty bullish here. I feel good, and I'd be willing to buy Sandisk anywhere for like $1,100, $1,000. Under 1,000 is a blessing in my opinion. I actually feel really good about it. So that's what we got there. On those ones, just to do a little bit of recap on everything outside of those big boys that we got earnings reports from today. SPY did make a beautiful move earlier this morning. It's getting a bit of a rejection right now. This is completely normal. It is very, very normal to see this. Look, it pushed into this extension zone, and we saw a drive up to 3.27 on the HCI. It just means there was a lot of sell pressure here, so you are seeing a bit of a pullback. It honestly wouldn't shock me if it pulls back tomorrow. Seeing SPY coming into like 761 or like 765, 761 actually wouldn't shock me as the sell pressure steps in. People will feel a little bit nervous about the semiconductor sell-off after hours today, but yeah, I could see this maybe pulling back into the 760s. But it's not a big deal, right? You get a breakout, you get resistance, you get rejection, you back test, you find support, you go for it again. I think SPY will be fine as long as nothing really dramatic changes. Outside of that, you do have some pretty strong signals from some other stocks. AppLovin does sound like a McDonald's app, and I now cannot unhear it, and I hate you for that. Nvidia is breaking out. I'm going to make a YouTube video tomorrow morning. It's going to be titled something along the lines of like Nvidia and Micron are breaking out, do this next, or something along those lines. So I'm not going to dive too deep into it now. Be here for the video. It is trying to break out right now, but there is some there's a task in front of it at the golden zone. Stay tuned there. Same with Micron. Micron's failing to break out right now, actually. So that video will be titled something a little bit different. AMD is getting a rejection back down towards that previous zone of liquidity. As you can see here, there was liquidity here. It's getting rejected back down to it. I'm actually still feeling pretty good about AMD as long as it's above this micro golden zone between 442 and 460. As long as AMD maintains support here, I'm actually feeling fine. If it starts falling between 442 to 420, that could start to get a bit more problematic, and you're probably looking at a sub 400 AMD. So I'll update you tomorrow on that as we open up and see how it interacts with your golden zone. Sandisk, very simple. Sandisk is getting a rejection right now, and I think it is justified for now because we are in a rational market, and I think I can justify the fact that the market is being irrational. Currently at 1254, coming back down towards some of these lower levels. It wouldn't shock me to see it fall to like 1133 or 1065 to retest bottom side golden zone, but we'll update you tomorrow. I told you all, though, it's under this major point of resistance. There's going to be a lot of sell pressure trying to force the price down here. You got to be very careful. You got to be very careful when you have all that sell pressure right there. And that's why I tell you, these are your sell zones. When the price pushes up towards that sell zone, that's your sell zone. We're not particularly back in buy territory yet. You know, I would at least be looking for a moment like this. Your 4-hour HCI flipping green, that has historically shown you the times that it was best to be buying. We're not there quite yet. So if I was looking to do a bigger purchase on Sandisk, I would personally be waiting for some sort of maybe even continuation downward or attempt back into the golden zone, okay? But I'll keep you updated there. I didn't mention to you all before, I did open up a long trade on SpaceX. This is a stupid long trade that I'm doing, and it is currently down 17%. I don't particularly care. aware. The only reason why I'm doing this right now is simply because SpaceX has those unlocks tomorrow, and everyone is saying that it's about to crash. And because people are saying it's about to crash, I'm like, screw it, I'm just going to buy it. Open up a $100 long trade. I'll just let it die. I'll let it drop 33% and get liquidated. I don't particularly care. It's worth the gamble to me. I always like going against the grain or, swing trading in extremes. So I do have this long trade open. This is over on liquid.trade. Don't forget, this is where I do all of my trading at. For example, you can, you see here, you guys saw me do it last week, 9% gainer on Micron, 42% gainer here. So realistically, I have a bit of profit to play with. So if I lose it on SpaceX, it is what it is. I don't really care. But I'll keep you guys updated on it. I did open it at roughly $115.40. We're at $108 right now, so I'm down about 17%. We'll see how it goes tomorrow. If people do start dumping their shares, I'm going to get liquidated. Again, I don't care. I'm not trading with an amount that I even remotely care about, like even in the slightest. Okay, so I'll keep you guys updated there. With that in mind, let's move forward. SoFi, just a quick recap on SoFi. SoFi is still in a sell moment or a hedge short moment. Opening up a short hedge here does start to make a bit of sense as you are approaching that seller zone. I don't do it until we're in the red zone, but to each their own. SoFi is just not a buy right now while it is close to that seller zone. Remember, that's the danger zone. So just waiting for SoFi to play out at these higher levels. Robinhood is getting a nice little bounce for us, but nothing super interesting right now. I've told you all, Robinhood is just trying to figure out its trend. Nothing to report back. I'll keep you updated there. Jumping into your hyperscalers, you are seeing a little bit of a pullback here for something like Microsoft, but it is very normal. It is extremely normal. Microsoft came up and broke through that previous point of resistance. It broke through your high right here at $467, and now it's kind of, struggling a little bit to catch momentum because it is still towards the top side of that macro golden zone, as you can see here. And come towards the top side of it. This is the danger zone. If you're looking to exit on Microsoft, now's your time to sell. If you're a swing trader, right? If you caught Microsoft maybe somewhere around 379, you're up 28%. Now's your time to sell. This is the exit territory because the risk of some sort of pullback is very high here, even if it's just back to 467. Not saying it can't break out of the golden zone. It definitely can. There is a lot of euphoria in hyperscalers right now. So that is something to take into consideration. I'm going to leave mine open because I am just a long-term investor in Microsoft. I'm convinced it's going to hit $10 trillion one day. Same with Amazon, same with Google. I think they're all going to be $5 to $10 trillion companies one day. So I'm happy to leave it open, but I am aware that there's danger here and it very easily could come back to like 467. So don't be surprised by that. Same thing goes with Amazon. Amazon broke through the golden zone easy. Amazon broke through its all-time high easy. Now it's just pulling back, trying to find some buyer side support to let these indicators reset. This is super normal price movement. I wouldn't be concerned. Definitely not a buy yet because it is still a bit elevated and easily could return to that golden zone. But naturally, this is a wait moment. This is normal price action. Wouldn't be concerned by that. Google seeing a forced back test today after some bad news. They did have news that their chief scientist for DeepMind, which is like a subsection of Google. It's a here, I had it here. So Google DeepMind is a top artificial intelligence research lab. It was formed in April 2023 when Google merged its original DeepMind team with Google Brain Division. Operating under Google's parent company, Alphabet, the lab builds advanced AI systems to solve complex scientific and real-world problems. They lost their chief scientist and multiple other colleagues to go start their own company named Discover Loop. The market hated to hear that news, of course, already knowing that the market was punishing Google a little bit previously as a result of their CapEx. That's what we saw back here. It's already recovered a lot of those losses, but this is the forced back test that's happening off that golden zone because the market doesn't like that news. We'll see if it continues into tomorrow. I don't think it's that big of a deal personally, and it wouldn't shock me to see Google try to recover off that news. I think that's just a bit of a shocker. Bit of a shocker piece of news, but I don't really think it's a big deal. Yeah, so that's Google. Apple is continuing its pullback. I told you guys I thought Apple could come back towards 299 to 288. Not there quite yet, but it did get very close, and some would even call this a bounce off of that golden zone. So Apple's just doing what it does. I told you all I would be willing to do purchases on Apple anywhere under $300. So you're not there quite yet, but it does still look like a pretty appealing buy to me now that Apple has pulled back a decent amount. So Apple looks like a cautious buy, but a decent buy in itself, especially knowing that HCI is sitting at minus 337. Looking at Palantir real quick, Palantir is getting a bit of a rejection right now, but it is totally normal. Palantir broke out of this macro structure that it was in, and it broke above the golden zone. I told you all, though, don't get too excited until it breaks through this resistance. I said it needs to get above 164 and stay above it. If it does that, cool. We're going back to 184, smooth sailing. If it gets rejected, though, don't be surprised to see it pulling back towards 150 or somewhere around this trend in this golden zone. That seems to be where it's coming. Wouldn't be surprised to see it pull back a little bit more tomorrow to retest that liquidity there. And then we'll see if the buyers are willing to step in to give it a bump up. So if I'm looking to purchase Palantir, I'm probably giving it a little bit, see if it'll trend back down towards this buyer zone and maybe looking to accumulate somewhere there. Not financial advice, obviously, but we did get bearish divergence here. You have your HCI still elevated. A pullback is very normal. Okay. Oracle, not really interested in that one right now. Same with ServiceNow. Nothing with American Express while it's still in that trend. And yeah, same with MasterCard. So that's the majority of what I got for you today. Hey, I do want to remind you all really quickly. Do you see how when I open up the meta chart and I go to say the 4-hour, there are these things that says it's like the letter D in red or the letter D in green. This is a new divergence update that I'm working on the toolkit. So what it's going to do is automatically detect when divergences are occurring on the HCI and let you know. And a divergence is just an extra signal. It says, hey, while the price is going up, there's a divergence. It means that the price is weakening. You might end up seeing a pullback. Look at how the divergence went off here and then we crashed. Look at how the divergence went off here before we pumped, before we crashed, before we tried to get a little bit of a pump and then a pullback and then eventually a pump, okay? It does a very good job of identifying where these divergences are. I'm going to release this update sometime soon. I'm also looking to add another feature to the toolkit, which is going to automatically identify golden zones depending on your time frame. When I release this update, I'm making it very clear now. When I release this update, the price is going to go up. It's $100. It's going to go up to like $140, okay? But right now, there's a 10% discount code for my video on Saturday that closes tonight. It's a 10% discount code on the current price, meaning it's $90, 10% off. So if you go to the Toolkit website, purchase it and use code TOOLKIT, TOOLKIT, you're going to be able to get it at a 10% discount. And when I drop this update for these in the golden zone, you're going to automatically get the update. If you wait, the price is going to go up. And I'm not doing a discount for probably another few months. So if you want it, I'm just telling you now to go get it. Because what's going to happen is a lot of people are going to say, Tyler, can I please get the previous price? And I'm like, I'm sorry, but we kept it there for a month. No, right? So if you want the toolkit, go check out the toolkit. Okay? Okay. Just want to make sure you understand that very clearly. The link for it's down below. Oh, also, I will let you know while I'm plugging stuff. Liquid. This is the platform that I currently trade on. I'm going to be doing a trading challenge on Liquid very soon where we're going to do giveaways and all sorts of stuff. It's going to be sick. So if you are someone who does swing trade and you've never done swing trading, maybe via leverage, be careful, by the way. Don't do this if you don't know what you're doing. Check out Liquid. This is one of the best platforms for trading. Again, you guys have seen me make some decent money, and I'm currently losing a little bit of money on my SpaceX trade. You guys have seen me do a lot of stuff here. I'm going to be doing a lot of stuff with people who use my affiliate link down below. When you use my link, they're going to give you a 10% bonus on your discount on your fees anyway. But then we're going to do some additional stuff in the future. So if you don't have Liquid, go check that out. Liquid.trade. Use my referral code. Links down below. Okay. Those are those two things. I don't really think I have anything else for you guys today. I'm going to be going out of town tomorrow. I'm leaving around, I don't know what time actually. I'm leaving tomorrow. I do have a video planned for tomorrow morning. I'm still going to post a video Friday morning from my hotel room. I'm going to try. I have an educational video that I'm going to post on Saturday about overextensions, where I teach you guys how to recognize when a price is going too high or going too low. I'll show you the toolkit, the RSI, the Bollinger Bands, that sort of stuff. Sunday, I'm going to make a video when I get home to prep you for next week. Next week is a bit of a chill week, which is good. I know we have Nebius and we have... Damn it. We have Nebius and there's one more company I'm interested in. Hold on. There's one more company I'm interested in. It was Nebius and who was it? AMAT, Applied Materials. Nebius and Applied Materials are next week, so we're going to dive into that. I'll make that video when I get home on Sunday, okay? But I'm not going to be live Thursday. I'm not going to be live Friday. I'm not going to be live Saturday or Sunday. So I'll be back Monday. Okay. I try to do live streams every day that I'm home when the market closes. So there's that. I will, however, be sorry, I was reading something. I will be active in the Discord still. Okay. So all of you TH Cap members, I will be active here. I'm going to be a little MIA, but I will be available. If you need me, just message me in the general chat. If you're not in TH Capital, this is the third piece to this whole pie. There's Liquid, there's Toolkit, there's TH Capital. Okay. You can go check it out down below. This is my personal platform where I have courses on things like technical analysis, fundamental analysis, building a portfolio, introduction to stocks. I have a swing trading course coming out, a leverage trading course coming out, retiring with stocks course coming out, and another one all over the next 6 to 8 weeks. Those are all going to start releasing in a few weeks, okay? Courses are available there. We also do live events. As you guys can see, I've done some with Connor Kinney. I've done some of myself. And then in addition to that, you can see everything that I'm buying, everything that I'm selling, all of my portfolio updates, and join a community of people who are obviously winning, as you can see. So that's everything that I want you guys to check out. I don't think there was anything else. Recap. Liquid trade, go sign up if you trade. Toolkit, the price is going to go up in a few weeks. This is your last chance. TH Capital, come join the Discord. We got a great group. I'll see you there. But with that in mind, does buying the toolkit give you Discord membership? No. So when you get the toolkit, you will be able to join this mini section of the Discord, which allows you to ask questions, see the tutorials, and learn more about it. But you don't get access. This is TH Capital right here, okay? So you got to join TH Capital to get all this stuff. So I think that's everything for you guys. I do wish I could go live tomorrow morning. I don't think I'm going to have time. So with that said, it was another great week. Thank you guys so much for being a part of the journey. Just wanted to take a second. All of you who are always around, whether it's Treach, Killer Space, Mark Babel. I'm trying to remember people's names and I can't now. Christine, Melissa, my boy, PWF. Yeah, I was about to say PWF. There's a whole bunch of you guys. I don't want to miss anyone. I'm blanking your tag here. Hold on 1 second. 1 second. I got to remember it because now it's going to annoy me. Freak. Who was I just talking to about cars? Why can't I think of the freaking... I'm going to find it. Now I have to because it's how I operate. Wait. We're almost there. Said getting a Viper. DMR. Okay. Anybody. Sorry. I know. That's how I get. Sicko. All you fellas. At AVG. W Jacob. Come to TH Cap, by the way. Thank you guys so much. If I'm going to be honest with you guys, I feel like this week I have felt more grateful and appreciative than I've ever felt in my life. And I'm going to be transparent with you guys. I have taken some very, very terrible hits this week in my business life. There have been some things, clients, things like that. Everything's fine. It's not a super big deal. I have another company outside of all of this. We manage a bunch of clients. We took some financial hits this week in terms of, clientele and things completely out of our control. Nothing bad, but not great. I don't know how to explain it. I was dealing with a lot of that. Not having some great news with my grandmother, stuff going on there as well. And you guys have just come together and been there and supported your boy. And I really do appreciate that. Look, I'm not trying to get all sappy. I'm not trying to get all weird, but all the jokes aside, I know I joke around a lot, but all the jokes aside, I genuinely feel like we have something absolutely special here. I don't remember the last time I've seen someone's community develop like this one has, where they started a channel and 4 months later, I've only been on this YouTube channel for 4 months. We have a community of sometimes 800 to 1,000 people coming together and talking about the market, looking at what's going on, doing technical analysis. We've sold 350 of the toolkits, and you guys are using it. People are sending me $1,000 gains, $10,000 gains. I have a buddy who went long on Bitcoin, different still, Bitcoin, made a $31,000 trade profit within 3 days, 3-day swing trade on 45x leverage. Things like that. It brings me more joy than you can understand. So for those of you who have been around, for those of you who comment, for those of you who for those of you who are in the live stream chat, and you're always talking, all the homies in the Discord, Crazy and Crowlow and all the boys, right? Thank you for the support. Because outside of the camera, right, I do have, it's cool because outside of stocks, outside of money, outside of investing, I am just a human. And I am a human who goes through shit sometimes. And I feel like I have a community of people who are backing me up. And that feels more, you don't understand. You don't understand how that feels. It's a weird feeling. It's a very weird feeling. And it makes me feel like I can run through a fucking wall with you guys. And that's exciting. So I'll be back on Monday. I love you guys. I appreciate you being here. See you on the next one. Bye, everybody.